Perfect. So, yo, what is up for everyone watching this on the YouTube replay? I hope you're having a great Sunday because the market did crazy good on Friday, and the market actually opens in 8 hours from now. So just know if you're watching this on the YouTube replay, at the very top left, it says it's 11:38. I'm also going to be streaming right at 8 p.m. tonight when the market opens, the overnight market. So yeah, let me start this off with a quick portfolio update. Then I'll get into some of the stocks that I think might be interesting buys next week. I'm looking to buy more Wix, looking to buy maybe more Perimeter Solutions, some of these new names. Oh, and I placed a buy-in order for ticker symbol COCO. Yo, my Roth IRA is so over the place, and I'm probably going to sell out of AbbVie just to consolidate this and maybe another I don't know. So this portfolio is so subject to change and it's terrible. I got way too many holdings in here, but yeah, let me go over my main account right here. This is our Robinhood account called our dividend only portfolio because every stock in here pays a dividend. Year to date, we are up 18%, and that's really good because if we go to April, we were down just as bad as the market was. The April dip, we were down 14, but now we're up by 18, so we're doing pretty good. And here's our total percent change on every stock in here. So luckily, we are up on every holding in here. Constellation Energy has been on fire. Constellation Energy said they're actually sniffing out a new deal with a major player. I'm guessing that it's going to be Oracle. There's also so much good news around the nuclear industry. They're like speeding up. The administration's forcing, like, instead of it taking years to get a new reactor online, it could take less than 90 days now. Hey, what up, Ishwar? What up, Looney? Hope y'all are having a great Sunday. So yeah, here's our total percent change on every stock. So yeah, that's our Robinhood account. We also have everyone's favorite My Webull account, where I kind of just do whatever I want here. It's our risk on account. All time, our open profit and losses were up 24% or $3,700. And yeah, these are all the stocks that we own in here. You know, a lot of popular names like AMD, Robinhood, SoFi, Reddit. And I try to buy stocks that actually have good numbers, like good financials. I try not to buy much junk. So yeah, we also have some big losers in here, of course, like UiPath, Zoom, Sprouts, Progressive. But I'm actually looking to buy the dip on these. You know, as tech and semis do really good, some of these staple, boringer names don't really perform as well. Oh yeah, one of our newer positions is Axon. It's like a super overvalued company, but I do really like them. Do you invest in O for your dividend? Oh hey, I do not own Realty Income. Just because they're too slow of a grower for me in my situation, but I do like them. They do have a safe like. That's a good triple net lease REIT. Yeah, and then we have finally our Moomoo account, where if you look in the top, it's called our buy and never sell portfolio, because once I buy a stock in here, I legit try and never sell it. So, and you won't believe this. Year to date, we're now up 80%. Again, we were doing just as bad as the S&P 500. You know, actually, we were doing worse. We were down 16% when the S&P was down 13, but now we're up 80%. That's mainly because we actually bought the dip during April. You know, mainly Comfort Systems right here. This was our main winner. That's like the whole reason we're up so much. We bought all of our shares this year. Powell Industries also hit an all-time high. And the other reason we're up 80% year to date, if we go to all-time, one of the reasons we're up 175% all-time in here is because we haven't sold before today. We haven't trimmed our position. You know, most people, when they're up double, triple on a position, they'll want to trim. That's what I've done before, and I regret most of the time, especially in this market, most likely you regret every share you've ever sold on a lot of stocks. Like I've been there. I sold out of all my Palantir like an idiot. Like look at Robinhood. We sold 50 shares of Robinhood at $36 a share. It made sense at the time because we were up 3x, but now it's $139 a share. So we missed out big time. Same with SoFi. I regret every share I've ever sold of SoFi. So that's why I made this portfolio as like a case study. Is we're never going to sell our stock once we're up on them. So yeah, that's all our holdings in here. We got Coca-Cola Consolidated. Amazon's one of our newest buys, man. I love Amazon. I mean, they just made Trade Desk fall like 5%. I mean, there's so many businesses about Amazon I didn't even know about. Like their CTV business, their drone, their robotics, like so many cool ones. Someone said, what app is this? Hey, I'm not sure which app you were talking about there, but yeah, all three of these are brokerages. You know, brokerages, they ask you for a bunch of information. You get a tax form. So if you want to get any of these, they're all in the link tree in my bio. But let's see right here. They made me lose a lot on the Trade Desk. Yeah, so Amazon, it was actually by a leaked slide. Someone leaked this, but Amazon is basically doing now exactly what the Trade Desk does, and they're going to offer it for free or something like this, or like Amazon free head-to-head testing program against it. Basically, an exact rival product to the trade desk. And the trade desk, here's the thing about this company, why I wouldn't probably buy the dip yet on this name. If we go to their valuation, like they're still pretty expensive. They trade at 62 times PE, 62 times net income. And that's not some one-time adjustment either. Like they're really trading at 62 times PE. I think it's hard to pay that high of a multiple, especially when we're seeing the growth slow down. If you didn't know, Netflix used to use the trade desk. Netflix used to use the trade desk to find their ads for their new ad tier subscription. But now Netflix canceled their trade desk, the whole partnership with them, and now they went over to Amazon. So that was not great. That's one of the reasons they gap down. So, and they're just a high PE company. Any miss on growth will send the stock down, and they're kind of losing their margins a bit, just from competition. If we go to the revenue, the sales are up 18%. So sales are up 18, but the net income is only up by 6. So what does that mean? It means the net margin is down by 11% year over year. So I think it's still too expensive at 62 PE. Hey, what up? All Blackout. Good to see you, man. I am doing good. Hope everyone's having a great Sunday. By the way, if you want to hit the follow button, we'll be live in exactly 8 hours from now as well. We're going to be live for another 2 hours and 30 minutes probably. How does Moomoo compare? Yeah, hey, Moomoo is my favorite brokerage out of all three of these. I have a video where I compare all three of them, but yeah. Yeah, again, if you want to get this brokerage, link tree in my bio, very first link there. This one I'm on right now is my favorite first link. It's free, no fees or anything. Okay, so, and by the way, all those links up there, if you want to get any of these brokerages, they're all affiliate links, full disclosure. So if you go and deposit $100, we'll both get some free stocks. But anyway, here's Dell right here. They're actually, hey, what up, Sean? We'll look at ENTG after this. What up, Rihanna? How's it going? So yeah, here's Dell Technologies. They're getting into the server GPU installation. So if we go to their infrastructure solutions right here, this is what I love about Dell. It's the growth is back. The sales are up 44% year over year. It's up 62% from the previous quarter. That's insane, those growth rates. So maybe I can remove those. So yeah, maybe I could keep on the year over year growth rates, but that's insane, the growth there. And if we just go to their total revenue, the revenue's up 18%. So the sales are up by 18, but the net income is up by 32. So they're easily making over $1 billion of net income a quarter. It's kind of like a value play. You get a 1.22% dividend. They raise their dividend every year. The PE is still, even at all-time highs, they're only trading at 23 times net income. Again, low margin industry, single digit, but I actually like them. I think they're a nice value play. I don't know if I expect them to outperform. What do you hold in the Robinhood account? Yeah, here's my Robinhood portfolio. I got this is my dividend only portfolio. Yeah, someone said, do you like any small caps? Not really. I try and stay away from the small caps, but I do have Delcath, DCTH. They're worth like 300 mil, and Cormedics probably they're worth $800 million. Out of all the $800 million stocks, $800 million market cap stocks that exist, they're my favorite. Their numbers are so good. So, and yeah, we have our Webull portfolio as well. We got a lot of portfolios. I definitely have too many stocks, I know. So, all right. Let's see here. What should we look at? Axon stock? Yeah, hey, Axon, that one's super overvalued. I do own Axon, by the way. I got one share of them. I'm talking Axon is more overvalued than Tesla. It's more expensive than Palantir, but it's a great company I want exposure to. The best drone defense play out there by far, but they're mainly a police body camera play. The whole UK police force uses Axon's body cams and their cloud because they store the footage and stuff. So anyway, if they're trading at 400 times next year's net income, so they're a bit expensive, but I just like the growth on this one. They're a growthy name. We can see the analysts are expecting the revenue to continue to just climb higher. They're just an innovative company. They're still making net income every quarter. They're still profitable. It's not like there's any bankruptcy risk. But yeah, $57 billion market cap is expensive. So I bought one share of them to start off my position. Is that what? Hey, what up, big mans? How's it going? Hey, Caroline for the rose. Hey, I do appreciate that. Someone TWH says SoFi. Hey, I do own SoFi stock. It's another one of those companies. I regret every share I've ever sold to them. Yeah, we own SoFi here. Also in our Webull portfolio, we're up 390%. I regret every share I've ever sold, but here's why. They're not just propped up on momentum. SoFi definitely deserves to be doing this well. I wouldn't buy the stock right here. I certainly wouldn't pay its current price. But here's what's so great about them. If we go, they're a fintech, they have their own banking charter, they got it through a loophole that's patched because of them. Their financial services business growth is insane. It's up 105% year over year. After it grew 80%. After it grew 244. Like they're on a streak of growth, and that's way more than the analysts thought. We can actually see the analyst expectations. That's the orange line. You notice every quarter they beat on revenue, they beat on EPS, which is net income, they beat on EBITDA, and by a big margin too. They expected 84. They reported 125. Like that's a 50% beat. Like that's insane. I just really think people are starting to take SoFi serious. Sales are up 50 or 42. They did 850 million in revenue. Out of the 850 million in revenue, they did 100 million in net income. They're making net income every quarter. So that's why I think people are taking SoFi serious. That's why I own them. I'm totally biased, not financial advice, but yeah, I do own them. So what do you think of? Oh, Red Cat. Hey, what up, John? Look at Bitcoin on a monthly chart. Yeah, we don't really look at crypto on here. I actually, I regret not owning any Bitcoin, but yeah, there's Bitcoin for you. Because a unique feature about Bitcoin is they don't report earnings. There's no numbers to look at, so there isn't that quarterly catalyst. Like Bitcoin can't miss on net income, or you know what I mean. So, yeah. So, any thoughts on RCAT? This is your drone play. Now, they're basically converting from a revenue-less startup to having real numbers. Oh, what happens? Yeah, hey, by the way, if you want to get this app, by the way, this is a brokerage, or I'm not sure what app you're talking about. By the way, all three of these are brokerages. It's where you buy stocks on. They ask for a bunch of information. So, out of all three of these brokerages, though, this one's my favorite for the most useful one, and it's free, no fees, no commissions, nothing like that. So, yeah, if you want to get it, link tree in my bio, very first link there. They're all affiliate links to full disclosure. So, if you go and deposit $100, they'll both get some free stocks. But here's Red Cat. Here's what I love about this stock specifically. Again, if we look at their right now numbers, they're terrible. Not something I'd want to buy. We can see the revenue is $3 million. The revenue is down 18% year over year. But check out what the analysts are expecting in 2 quarters. This is why the next 6 months are crucial. You're in for a ride, because watch this. The revenue is $3 million this quarter, but analysts are expecting $49 million in 2 quarters. So that's why I think they're really momentuming higher on that future expectation of a bunch of revenue coming in the future. So we don't want to see the miss on this number, but yeah, basically you're holding off for 2 quarters till they get that. Let's see, is there any news? Unusual Machines secures U.S. Army contract. Okay, anyway, yeah, that's a drone play. Let's see here. Wait, which one is this right here? That's like, this is such a cool stock right here. I'll just have to type it in. This is Tencent right here. This is here we go. This is a Chinese company, but if this was an American company, they would legit be in the Mag 7, because they're the number one game company in the world. You ready? They own Riot Games. So if you've heard of, League of Legends, Valorant, this company wholly owns that. They also own 49% of Epic Games, and Epic Games owns Fortnite. They also own PUBG. They own Supercell. So if you've heard of Clash of Clans, Clash Royale, they own that. I mean, they're an absolute beast of a company. And they own a bunch of stakes. Like they own 10% of Reddit, 10% of Snapchat, 10% of Pinterest. Like they are like an ETF in one. So I love this stock. They are Chinese. They are an ADR, but this is, out of all the Chinese stocks that exist, this is the best one of all time. And we've converted the currency from Chinese yuan to USD. They legit make 7 to 8 billion of after-tax net income a quarter. I mean, hey, watch out for the guy in chat there. Oh my goodness. I need mods or something. I'll get that guy fully taken off TikTok. I have a guy, because he's clearly a scammer. Okay. All right. Fast Dennis 66 pasted. Okay, he's gone. Okay, let's keep going here. All right. Ooh, Taiwan Semiconductor. That's a cool one. So this is a stock I wouldn't sell, even though they're at all-time highs. I wouldn't sell this one. I wouldn't trim my position. I'd keep on holding on to all my shares, because this is the kind of stock that I think is just going to continue to climb higher. Check this out right here. If we go to their revenue right here, this is what's insane. The revenue is up 35%. So the revenue's up 35, but the net income is up by 42. And notice the net margin on that. The net margin is up 53%. They're making, easily 10, 11 to 7. They made 17 billion of after-tax net income this quarter. I mean, absolute insane. And it's kind of like you get exposure to NVIDIA with the higher dividend yield. You get a 1% yield. If you didn't know, NVIDIA just designs their chips. Taiwan Semi actually manufactures them. So, and Taiwan Semiconductor also just opened up their Phoenix facility, and they made their first ever Blackwell chip successfully in their Phoenix facility. I wonder if that's still on the news down here. Oh yeah, look at this. Taiwan Semi and NVIDIA launched Blackwell chip production at Phoenix facility with the 165 billion US plan. Well, they created their first ever Blackwell chip in the US like literally last week, so that's good news. We're slowly trying to move our manufacturing away from Taiwan, which is 5 feet away from China. What happens is, yeah, hey, by the way, this is a brokerage where you get stocks on. If you want to get it, it's in the link tree in my bio, very first link there. All these brokerages are, by the way. I'm not sure but yeah, this one's my favorite one, lowest fee, free. Okay, so NET. Oh, dude, Cloudflare. Wait, I saw a stock I wanted to look at first. Applied Digital. Yeah, actually, APLD. That's a company owned by NVIDIA. If we go to the NVIDIA portfolio right here, their largest holding is CoreWeave, but then their second largest holding is APLD. So they actually just reported earnings, and the earnings are really good. Like, that's the reason they gapped up on this day, because of their really good earnings. If we go right here, the orange line is what the analysts expect. Analysts expected 45 mil, and they reported 64 mil. If we go to the EPS, the analysts expected them to lose 13 cents. They lost half of that. They only lost 7 cents. So I can understand why they gapped up on earnings. It was a lot of that. The beat on earnings was kind of priced in before today. But yeah, they're a data center hosting business. So I wouldn't pay its current valuation. But they're owned by NVIDIA. They're certainly interesting. I'm probably put on the watch list, but probably wouldn't buy them today. But I can see why they're doing so good. They definitely deserve their momentum. That was a big beat on their revenue and on their net income losses. I was sent. Not a Rio, what up, a la round show. I'm thinking of selling Microsoft for Meta. Thoughts? Well, hey, honestly, I wouldn't sell out of Microsoft. I would just allocate new money toward Meta. Yeah, Microsoft is another never sell stock, I think. I do on Meta. Meta's actually at a pretty fair valuation. Honestly, wait, next week on the same day, next week, I'm pretty sure we get Meta, Google, and Microsoft earnings, or maybe it's Amazon. I don't know, but we get 3 crazy earnings on the same day next week. I think Meta's one of them, or let's see here. Earnings on October 29th. Yeah, so we get Meta next week. So if you buy them now, you're kind of bent before earnings. But again, if you have the intention like me to just never sell, it's worth buying Meta even here. Hey, what up, NDR? Thanks for the 20 roses. No way. Well, platform. Yeah, hey, again, this is a brokerage where you buy stocks on. If you want to get it, it's in the link tree in my bio, very first link there. They ask for a bunch of information. Okay, so here's Meta right here. This is crazy. They're daily active users. They have 3.48 billion daily active users, between Instagram, Facebook. They own WhatsApp. They're actually just now introducing ads to WhatsApp. I can't wait to see how that'll turn out for their earnings. That's going to be a huge earnings tailwind. And they also own Threads. Threads now has the same amount of daily active users as X does, which is crazy. They print money too. Meta legit makes 15 to 20 billion of after-tax net income a quarter. They have 40% net margin. So if you go spend $100 on Instagram ads, they keep $40 of that as after-tax net income. It's insane, their margins. They print money. They're investing into AI. You get a small dividend. Has anyone seen the new Meta Ray-Ban glasses? Where you can scroll through reels and stuff on the glasses. They look pretty cool. So they're like $800 though. So I won't be buying a pair, but yeah, they're restructuring their AI division, 600 job cuts in their AI division. So they're kind of lacking on AI, like their Llama LLM isn't doing well. Hey, what up? Big man said Texas Instruments. Taiwan Semi has a great balance sheet too. Exactly. Yeah. Wait, I want to go. Here's a chip play that I wouldn't buy, because this company, out of all the chip plays out there, I don't like this one just because they suffocate themselves with too high of a dividend payout ratio. Let me know what you think about this. So, and they've just kind of been they've been a slow grower when everything else was growing like crazy. Their sales were down double digits, but it looks like the growth is finally growing from that pit. But look at this. Here's the part I don't like. If we go to their net income, as you can see, they make, if you average it out, 1.3 billion of net income a quarter. They actually retain nearly none of that. If we go over to the cost of their dividend, the dividend literally cost every quarter 1.24 billion of net income. They literally retain no leftover money. So they have a 3.22% dividend, great yield, but the payout ratio is 100%. That's what I don't love. So they can't really invest in the future without having to dilute you or issue debt. Hey, Isaiah and NDR, thanks so much for those gifts there. Yo, happy Sunday. Uh, dude, he said thoughts on FICO. Dude, no way, dude. He sent a meerkat. Heck yeah, dude. I really appreciate that. Yo, you don't gotta send gifts. But yo, what up, Irene? What up, E Bassive, Ricky, John? We'll check out all these right here. Sorry, how about YD? Yeah, what do you think, SoFi? Hey, we'll try and get to all these right here. So no way. Oh my goodness, yo. Shout out to I don't know what I just did. Shout out to my friend right here. With the 25 Ron. Today pizza. It's your birthday. Oh my goodness, yo. Happy birthday, dude. Yo, I actually hate YouTube. They changed this where like it changes your name and I don't know your name anymore. It was Maddie. Dude, thank you so much for that, for those gifts. I really do appreciate that. So here's FICO right here. By the way, if you want to hit the follow button, I sell nothing. I stream daily. I have no course, book, WhatsApp, nothing like that. So yeah, FICO, they're really popular because of their score businesses. Anyone heard of the FICO score? Whenever you make like a big ticket purchase, like a okay. Yeah. Whenever you make a big ticket purchase, like a house or a car, you're paying like a couple dollars for your FICO score, like $10 or something. And that's why they've had immense pricing power because they've risen at like dollar every year. And because consumers don't care if you're buying $1 million house, if you're paying $10 or $15 for a FICO score. So they've had a lot of pricing power on this. Now, one reason, if we look at the stock, why they've like gapped down on, like, why'd they gap down so much on this day when there was no earnings? Well, the government in certain other entities, I think maybe it was like FICO, or no, it was Moody's or S&P Global. I don't know. They're creating like a FICO score competitor. So some sort of competitor to a FICO score. So maybe they'll have less market share because they do have like they're the largest market share. They make good money. That's why I like this name. They make a lot of money. They're making easily 150 to 200 million in net income a quarter, and no dividend on this one, but they don't need to be paying one. So yeah, there's FICO for you. All right. So Ricky said, how about YDKG? KG stock. But yeah, do you think it's ever going to go back to 2K a share? Yeah, it could. The valuation is just still a little too high on FICO score. Or yeah, hey, we're not going to cover this name right here. We don't really cover these kind of stocks. If you look in the top right, the market cap, they're only worth 23 million. That's like a flip of a coin. We don't cover these kind of stocks in the channel here. Yeah, the revenue. Oh, this is from 2015, so they don't have any revenue. They have more liabilities than assets. Like, yeah, I can see. Yeah, don't touch that one, please. Really enjoying the. Hey, thanks TWH. I appreciate that. So, LAES. I think that's another like quantum. I think momentum play. They're now over $1 billion. They went up 22%. So yeah, that pushed them over $1 billion market cap. So let's see if they have numbers. Revenue. Wait, where are they headquartered? They're headquartered. This is a Switzerland company, so they're not an American headquartered company. So that's why you see how it says H1. They report in halves, so they don't report quarterly like US companies do. So that's why the stuff looks a little weird here. Hey, the analyst expectations are good though. The revenue is 4 mil. It's for the half. That's terrible, but it's going to go to 15 mil, so like 8 million of revenue. There's growth, but it's mainly momentum play. I probably wouldn't trust too much money in that one. I'd probably take advantage of the volatility, do some shorter swing trade around that one or something. Well, Meta stock split. I think Meta will stock split maybe around 1,200. I think they'll let it go over 1,000, but probably not. Maybe around 1,200. I think Meta will stock split. All right, so which one? This one. Remco said RSG, Republic Service. Yo, this is a great stock in my opinion. Hey, what up, Jack? How about Amphenol? Yo, we'll look at Amphenol. Yo, I love that stock. Yo, Zalfa said CHAGE. Maybe I don't know if that's a ticker symbol. Maybe. Oh, remind me to look at Amazon and ASTS, Justin. I want to look at Amazon too. Let me get a sip of my tea here. So here's Republic Service. If you've heard of Waste Management, this company does the exact same thing as Waste Management. They're just they move nearly identical, so they're worth 69 billion. You know what? Let's actually pull that up. Let's overlay Republic Service versus Waste Management stock. So actually, look at that. Over the long run, Republic Service has outperformed Waste Management. Let's go look at their numbers right here. So you get a nice, even if you buy the stock now, you get an over 1% dividend. They raise the dividend every year to keep up with inflation. The yield's only 1%, but look at the stock price. You're okay with the low yield because, you get 1% dividends, but you're also getting 7 to 10% returns in stock price appreciation a year for a total return of like 11%. It's a safe industry. I think this is going nowhere. People always got to throw away their trash. So yeah, recycling and waste business. Wait, what did I say? Primarily in geographic areas in Southeast. Okay, so yeah, and we can just go to their net income right here. It's super consistent. And it's growing too. Every quarter, there's year-over-year growth, double digits. Check that out. So they're easily making 500 mil plus of net income every quarter. Then they share it with you via dividends, share buybacks. They're a great never sell. A great one. So Jack said, how about Amphenol, APH? Let me go to ASTS real quick, and then we'll go to Amphenol. There's so many stocks I want to look at. I'm behind on the chat. I'm so sorry, guys. But so here's ASTS Space Mobile. I try and go quick with every stock here. I only try and spend like a minute on each one. So here's ASTS Space Mobile. What I love about this one are the future growth expectations, because I think that's why there's been so much momentum around this name. If we look at their right now numbers, they're not good. They did $1 million of revenue this quarter. But if we go to what the analysts are expecting in 2 quarters as they recognize their first contracts, they're going to make $22 million next quarter, and then 35 mil. So they're going to be making in the next 12 months, like a couple, maybe over 100 to 200 mil of revenue. So it's really going to be so volatile the next 6 months. You're in for a roller coaster. So good luck with that one. I wouldn't have it as a huge size position, but the next 6 months should be really fun. So here's Amphenol Group. It's actually one of the stocks I own here in my never sell portfolio, and I'm not selling a single share. I'm not taking a single dime of profit. They deserve to keep on going up higher. This is the kind of stock that's just going to, like I said, just continue to go higher, in my opinion. The valuation isn't too fair right now. I mean, 44 PE, again, if you look, it's so hard to tell, but the PE ratio collapsed. It used to be 50. The stock price went up. The stock price is up from when it used to be, but the PE ratio went down because the E part of the earnings went up so much. So check this out. If we go to the sales, the revenue, it's up 53. This is insane. The revenue's up 53, but the net income is up by 106. The margin expansion is insane. Their net margin went from 15 to 20. Like, that adds money to your bottom line, and not just net income, but also FCF, which is free cash flow, record free cash flow numbers. Like, this is the kind of stock I'd want to own. Yeah, they're in communication solutions. Their main partner is now NVIDIA. They're the ones supplying NVIDIA their copper cables. NVIDIA has this NVLink spine product that uses over 2 miles of copper cables in this thing, and Amphenol supplies them. Oh, yeah, they're a serial acquirer. They're acquiring Rochester Sensors. They're acquiring CommScope, CCS business. They just spent $10 billion buying this company. Like, there's also future growth. Oh, they just rose the dividend by 50%. So get a 0.5% yield now. Like, my yield on cost just went up to like 1.4%. I mean, crazy. Yeah, that was Amphenol stock, ticker symbol APH. They're known as the nervous system of AI. 163 bill market cap. It's, again, tough buying it here. I put it on the watch list, but wouldn't buy them here. Yeah, is it overpriced? Probably, but not in the long run. I, again, wouldn't buy it here, but it was so cool to see, just like a Comfort System stock. Before today, the PE ratio was way up here, trading at 50 plus PE. And even though the stock went up 15% since then, the PE ratio is down a bunch to 44. And the industry, they're trading at now a lower than the industry average. Industry average is 46, they're at 44. Kind of cool. Anyway, Amphenol is a cool stock. They're acquiring, what was the ticker symbol? COMM. So they're acquiring CommScope's business for $10 billion, saving them from bankruptcy. This stock had way too much debt. They were a zombie company. All right, let's keep going here. Yeah, it's a trash company. Hey, Zero. Hey, remind me to get to SoFi. We looked at SoFi a bit ago. Oh, Waste Management has earnings on Monday. That'll be interesting. Republic was on strike where I live a month ago this summer. Yeah, people aren't getting too happy about them raising prices. As long as they don't raise prices too much every year, government probably won't intervene. But yeah, so in some places, there is no alternative to like Waste Management or Republic Services, like their local monopolies for certain areas. So Celery, what up, my friend? INTA. There's so many stocks I want to get. I'm so sorry here. Like, what app you're using? Yeah, hey, by the way, this is a brokerage where you buy stocks on. If you want to get this app I'm on, it's in the link tree in my bio. Very first link there. It's free. But full disclosure, it is an affiliate link. So if you go and deposit $100, we'll both get like some free stocks. But here's Intap right here, something. They're a $3.3 billion company. Let's go look at their numbers because that's what we like to look at. So 67% of the revenue comes from the US. They're a software. They're in the DeepSeek AI beneficiaries. It provides industry-specific cloud-based software solutions. Let's check out the growth here. So they're growing actually pretty double digits. The sales are up 18, after grew 20, after grew 25, after grew 25. So yeah, they're on a nice streak of growth. They're not making any net income, but they're barely losing any. Like they only lost 500,000 in the most recent quarter. Wait, are they? The operating profit was negative 4 million. Are they making interest on their cash? Let's go verify this because they have a nice net cash position. Yeah, they made 4 million of interest. Hey, Isaiah, dude, thanks so much for the October. Dude, we literally just looked at Taiwan Semiconductor. I very much appreciate that gift there. If you have another stock you want to look at, let me know. Or if you'll wait a little bit, we'll look at Taiwan Semi. But we literally just looked at that one and we did like an in-depth one. By the way, I'm also streaming on YouTube. If you missed anything, you can replay it. I'm streaming on the YouTube channel. It's called Nathan Robert. You can just type into YouTube Nathan Robert. And yeah, that's the best way to support me. Just watch the stream from there. I'm trying to build up my YouTube channel. So is it a possibility for APLD to run like comfort systems? No, probably not. Just because the industry APLD is in. They just own a bunch of like data centers and GPUs. What is the best buy for the Magnificent Seven? Amazon's my pick. Yeah, I think for right now's environment, I agree. Amazon looks the best. Apple's too expensive, or for right now. They're all never sell. Tesla's certainly super expensive. Yeah, I think Amazon's a great one. Amazon's just a great buy and never sell company. I also just bought a little bit of them. Rich Tech Robotics. Yeah, hey, this is another one. It's a pure momentum play. Hey, thanks again for those gifts there. Hey, NDR, we'll look at NIXX after this. Yes, sir. Thanks again for those gifts. Yeah, I'm so sorry I didn't get to all these. We'll look at NIX after this. So here's Rich Tech Robotics, though. I would be careful around this one just because of the fact that there's so much they still have to prove. If we go to the revenue right here, the revenue right now is like they used to have some, like they used to do 5 mil but the revenue is still just 1 million this quarter, and it's down 18% from the previous year. So analysts are expecting 2 million of revenue a quarter, but I think this one is just a pure momentum. Maybe sometimes it's buy the rumor, sell the news, maybe on their event, because they're already at, 1.2 billion. I wouldn't have a meaningful amount of money in this one, certainly, but this is the environment to own this kind of name because robotics seem like the future. Out of my favorite robotics play out there, if you're looking for the best robotics stock, in my best robotics play out there is Amazon, like by far. Second best robotics play, maybe I haven't looked at Symbiotic or Tesla. So okay, so here's Symbiotic right here. This one is a warehouse robotics company helping out Walmart with their logistics. Remember, Amazon's a huge robotics company helping out their logistics, but Walmart wanted to get into robotics. So Symbiotic, they have over 50, again, we've looked at Rich Tech Robotics. They have no revenue. And I don't know if they have any patents or IP or anything. Symbiotic has over 1,500 registered IP and patents and trade secrets. They have real revenue, 500 mil plus of revenue, 600 mil, insane growth rates. And also, their largest customer is Walmart. And Walmart loved them so much that Walmart decided to take a stake in the stock. Walmart owns 13.5% of all the shares. So that's my favorite robotics play. Amazon is not a pure play, but still a good one. A great one. So NIX, oh yeah, hey, we're not really going to cover this stock. Hey, I feel bad, NDR. Yeah, I don't even like mess around with this name right here. It's at an all-time low. They're a $30 million company. The whole company's worth $30 million. Looks like they actually, for the first time ever, got some revenue. Is that real? Yeah, it looks like they had some real revenue. But here's the thing again, the whole company's worth 32 million and they lost 4 mil. That's over 10% of the entire company. Then 4 mil, 7 mil, 13 mil. So there's like high bankruptcy risk here. But it was really interesting to see the revenue spike up. I mean, if they can continue this, that would be interesting. But Aura Link, as long as they can continue that growth, it'd be interesting, but I wouldn't trust anything meaningful in this name just because it's, they lose so much money. So someone said SHLD. Yeah, this is actually your aerospace and defense ETF. If you don't know, like, which one do I buy, Raytheon or Palantir, Rainmetal, you can just buy this ETF right here that breaks your money up for you into the whole industry. So, yeah, a bit more diversified way to get exposure to aerospace and defense. Hey, what up? Rick how's it going, man? Um, let's see. Brian said CEG. Let's do Constellation Energy. Yo, this is a great nuclear play. Following Train Technologies. Yo, I love Train Technologies. Great stock to never sell, I think. What up, Kevin? Hi from YouTube. Thanks for the info. I think I'm ready to take shorts on AI stocks. Oh, yeah. Hey, you got to be careful shorting the quantum names like QBTS and stuff because the momentum can still continue. That's the thing. But it makes sense why you'd want to short those because those are the ones that if the S&P falls 10%, those names are falling like 40. So here's Constellation Energy. If you're looking for a nuclear play, I've looked at all the nuclear stocks out there that exist. VST, GEV, Oklo, SMR. Out of all the nuclear names that exist out there, this is the best one by far. Like there is no close second. This is the best one. They purest play for nuclear. They own legit 30% of all the U.S. nuclear reactors. Number one geothermal play in the U.S. Number one natural gas play. Oh, I don't know about number one, but huge natural gas plays. Well, our natural gas bills through this company, but anyway, best nuclear play out there by far. So there's just so much good news around this one. So yeah. Anyway, CEG, I do own them. I might be biased, but they're the best nuclear plays. Is CEG overpriced? Absolutely. But I could see them going. Here's the thing: CEG, they're about to. My prediction, they're about to do a deal with some big player. Like I'm guessing it's going to be Oracle. There's going to be a huge deal with Oracle or someone big, maybe OpenAI for another nuclear reactor. Remember, Constellation Energy already has a huge deal with Meta. They already have a huge deal with Microsoft. They literally have one nuclear reactor powering one Microsoft data center. Crazy. So how about SOUN? Yeah, so let's pull up SoundHound AI. Then remind me to look at Amphenol stock. And hey, we'll look at CCOI. I want to get to all these stocks. I'm so sorry if I don't get to all these. So here we go. Here's SoundHound AI. If you're a shareholder of this stock, there's only one metric you really want to watch, and that's this thing right here, their subscription revenue. They have some audio AI subscription software that people pay for, and it's booming. Check out the growth. They used to do like nothing, $400,000 of revenue a quarter on their subscription, but now lately it's 32 million in the most recent quarter. At this growth rate, what's it going to be the same time next year? I mean, that's 130. It's like 140 million of revenue annualized this quarter. So I like subscription model companies because it's all reoccurring. And if we go to the analyst expectations, they're beating like crazy on what the analysts thought. Check that out. The analyst expected them to make 32 mil of revenue, but they reported 42 mil. So a big beat. They're still losing net income every quarter. Basically 50, 40 mil a quarter. But if they could continue the sales at this growth rate, I mean, they could probably continue to climb higher. Yeah, hey, watch out for that guy there in chat. Actually, hold on. Hey, hold on. Boom. Okay. Yeah, watch out for the guy in chat there. By the way, I sell nothing. I have no course, book, WhatsApp, Telegram. I'll never follow you, DM you. I sell nothing. So watch out for people impersonating me. Yeah, the only thing I do have is a YouTube channel. My YouTube channel is called Nathan Robert, Linktree in my bio, but that's it. No other TikTok accounts or nothing. So yeah, watch out for people. I've already had, yeah. Okay, so someone said CCOI. Yeah, this is, Congent Communications. So, yikes, the stock, it's actually unfortunately the same price that it was in 2002. So you bought the stock in 2002, you're down on your position. So you're, it looks like a dividend play. Yo, that's crazy. A 9.3% dividend. So a 9% dividend, but again, it lacks stock price appreciation. So you're mainly buying this to maximize your dividend income. Let's go see if it's safe. So we go to so that's not great. First of all, the revenue, the sales, the lifeblood of the company, the revenue's down 5.5. Yeah, they're leveraged too. They used to have more assets and liabilities. Well, now they have the same amount of liabilities as assets. That's unfortunate. And how are they paying a dividend? They lose 50 mil of net income a quarter. How much does a dividend cost? Let's go see. The dividend cost 50 mil a quarter. So can they afford it from cash flow? They don't have cash flow either. They're literally maybe add it to the short list. Yeah, hey, I wouldn't trust that one at all. That one looks really risky. So yeah, you know what? We'll look at Comfort Systems. I saw two people ask about that. Let's do it. What up, King Sam? So yeah, Comfort Systems, this is my largest holding by far now. It grew to that position, I literally bought all of my shares of this. I bought all my shares of this company this year. But here's why this stock deserves to be at all-time highs. And I'm not selling or trimming a single share not selling out at all. So if we go to the revenue right here, this is what justifies it. If you just look at the sales are up 35, all right? Revenue's up 35. Sorry, that just okay, we're back, hopefully. Okay, hello. So, okay, sorry. The revenue's up 35, so the sales are up 35, but the net income is up by 99. I kid you not, the net income's up by 99. What does that mean? It means margins are expanding. They went from an 8% net margin to a 12, up 50% year over year. That just adds money to your bottom line, and that was real money. Like they're a HVAC company, heating, ventilation, air conditioning, also an MEP play, mechanical, electrical, and plumbing. If you go to their electrical segment, yeah, up 49% year over year. They also just they like raised their dividend quarterly. Look, it's 60 cents. It was just 50, 45, 40, 35, 30. So they're raising their dividend like quarterly, super low payout ratio. Like that's why this stock deserves to be at all-time highs. Also, the net income is up by 99, but the net income per share is up by over 101 because, again, the share part of the ratio went down. They're doing buybacks. They're doing dividends. Everything's growing. They're doing M&A. The record free cash flow quarter, the free cash flow was $517 million. It's never even been close to that before. Record backlog, no debt. Like, I've never seen a better company. It's actually one of the best performing stocks actually in the stock market history. I don't think there's any one. I didn't even buy the dip on this one. Well, I bought it during the dip this year, but I bought it after it was already up like 12,000% or 1,200% in the 5-year chart. Okay. Oh, yeah. What would stay away from Oklo? Yeah, Oklo is a big startup. Yeah, what software is this? Yeah, hey, by the way, you can get this software in the link tree in my bio, first link there. This is where you buy stocks on. They'll ask you for a bunch of information. So, yeah, if link tree in my bio, very first link there. Oh, and full disclosure, it's an affiliate link. So if you go and like deposit $100, we'll both get like some free stocks. But someone said SoFi. Hey, what up, AJ? Let's do SoFi. How about quantum? Yeah, I don't see any quantum names. Actually, the best quantum name out there appears to be Honeywell, HON, in my opinion, or even Google. Which app interface do you like the best? Yeah, I got all these brokerages right here. I got Webull, 2, and Robinhood. But yeah, out of all the brokerages, again, I like this one the most. It costs nothing, it's free, and it has the coolest tools, like all the super investor trackers, just best analysis tools. Anyway, yeah, link tree in my bio, very first link there. But anyway, or actually, if you want to get any of these apps, they're all in the link tree in my bio. They're all affiliate links too. So anyway, here's full disclosure. So here's SoFi right here, another stock that I do own here. I'll show you that. We own 24 shares of them. I regret every share I've ever sold of SoFi. We're up almost 5x on them. But check this out. If we go to their financial services right here, this is insane. The growth, this is what justifies the high multiple. The revenue's up 105, after grew 80, after grew 222. Like, they're on a streak of growth, like more so than the analyst ever thought. There's the orange line, what the analysts expect. Every quarter they beat like crazy. So they beat like crazy on revenue, net income, EBITDA. It's crazy. So, and they're making net income every quarter. They made $100 million of net income this quarter. So yeah. Yo, go to the Honeywell most recent investor presentation. Oh, I want to do it right now, but I'd lose a lot of viewers. Yeah, FIX went crazy, I will say. Wouldn't buy it here. So yeah, IBM's another good quantum play. Yeah, you're right. So Ash said super microcomputer. So yeah, the trade desk rebound, I don't think so. Not for a while. I still think the trade desk has another probably 20% to fall before I'd buy the dip for a good risk to reward. I mean, the trade desk still trades at like 65 times net income. It's rough. But here's super micro. This is another one I wouldn't buy at its current price. I do own this one. I want to see them do good, but I wouldn't touch them anywhere near its current price just because of the margin collapse. There is some good news. OpenAI, Oracle, they're ordering a bunch of new chips, and Supermicro's installing most of them, which is great. And Dell is doing a bit too. But here's the thing. They're giving customers these bulk deals and their margins are collapsing. So if we go to the revenue, this is great. The revenue's up 7%, 7.5. So the revenue's up 7.5, but the net income is down by 35. And that's not some like one-time adjustment either. Like, that's real. So the margins are collapsing. They just sell a commodity. Anyone can do it. The net margin was a 3.3, like low single-digit margin. So we just kind of want to see the growth come back, the margins come back. So that's my thoughts on Supermicro. Any good buys this week? Yeah, hey, I'm actually maybe looking to buy some more Ferrari stock, but yeah, that one's still not great. But yeah, some stocks I do like at their current valuations, Progressive Corp, the insurance company, Main. Oh, actually, here's the better answer, I should say. Those are the boring kind of stocks, but in terms of growthy names, I'm looking to buy more Wix. I got 5 shares of Wix. The more I look into their base 44 vibe coding acquisition and how I'm going to make a video about that soon. Perimeter Solutions, they're a nice, interesting, only ESG approved fire retardant out there. Number one fire control play in the US, basically, for aerial fire control. So I bought some more of them. Actually, I was reading into them. One company infringed on one of their trade secrets. It was someone from Compass Holdings or something, one of their subsidiaries, violated one of their trade secrets, and they had to give them $20 million of money or 20 million of assets, and 15 million of those was their IP. So anyway, they're a really cool. Also, I already have a buy order for the Vita Coco company. They sell coconut water. I get their coconut water all the time. So why not buy some of the company? They have absolutely no debt. Actually, let me go over them real quick. So if we go over Coco real quick, they have absolutely no debt whatsoever, completely debt-free company, and they're making net income every quarter. Check that out. So that's great, 20 mil in net income. Now, one of the reasons there was some shenanigans around here, Costco was giving them some troubles, like they got or it probably was this day right here. Costco was giving them some trouble. But anyway, seems thing to be fixed now. If anyone's heard of the Vita Coco water, look at the growth on this one. I mean, that's impressive, up 25% to a new record. So they actually they have a 44% market share for the coconut water drinking market. So 44% market share, and they're worth 2.2 billion. I think people really like coconut water. So they just sell a complete commodity, and I hate it's the most competitive industry ever, but maybe they could get bought out or something. Okay. What do you think about Shriller P? Hey, what's the ticker symbol for that stock right there? I'll check it out for you. And per se, can you look at FICO stock? Wait. I can't find that company right there. I look up at a ticker symbol. I can't find it for you, unfortunately. Unless you're talking about some Hong Kong or Malaysia company. Yeah, I don't think you are, but can't find. Maybe you mean FICO, but I don't know. Let's see here. Hey, what up, Catherine? Miles said OKE stock. What is? Oh, one OK. I think this is an oil and gas stock. So, or a natural gas stock. I think if we look at the price here, you're not going to outperform the market in the long run. Like, this stock is the same stock price it was in 2013. They just sell a commodity. But yeah, LNG, liquid natural gas, refined products and crude, natural gas gathering. So yeah, commodity, but these are real net income numbers, great numbers. Because there's been a huge recovery on natural gas. Like, there was a big fallback there, but the growth is back finally. They're easily making like 500, or actually more than that, 700 to a billion of net income a quarter. Then they share that with you via dividends. You get a 6% dividend yield. That's really the main value here. You get the 6% dividend, then you hope for a couple percent of stock price appreciation. 6% dividend, hopefully 2 to 3% stock price appreciation. So yeah. Hey, what up, Phil? Good to see you. TSLY for the dividends? Nah, stay away from TS. I think they're at an all-time low. Or actually, wait, Tesla reported earnings. Maybe they're not. Well, anyway, yeah, look at this ETF right here. This was created in it was $43 when it IPO'd, and now it's $8. So you're buying this to maximize your dividend income. You're not really going to outperform Tesla or the market in the long run. This is one of the worser return of capital NAV erosion covered call ETFs. As stock price goes down, yield goes up. It says they have 108% dividend, but notice the dividend goes down every year by double digits. Well, more than double, almost tripled. But yeah, not good. You can't rely on these. Like, if you plan on retiring in 2 years and you rely on this for dividend income, it's going to be tough seeing your actual annual payouts go down. Plus, you pay a 1% plus expense ratio fee. You don't beat the S&P 500's 8% return, and you're already losing by 1% to expense ratio fees. It's a tough one. It's almost like a slow bleed to your capital. You buy it to maximize your income. AMKR, I saw this one. Let's check out this one. Amcor Technologies. Hey, they've had a nice little recovery there. Let's go look at their numbers. What are their markets? So Advanced products, it's shown some slowing growth. Like the sales are up 3%. So the sales are up 3%, but that was a big beat on what the analysts expected. That's why the stock has been doing so well. That's why they gapped up on earnings. Check that out. Analysts expected 51 mil, but they reported 92. Oh, that's EBITDA. Okay, let me go to sales. So yeah, look at that. Revenue expected was 1.4. They reported 1.51. So a nice beat. They beat on every metric. That's probably why the stock is momentuming higher. It looks like the growth is back. Maybe you get a 1% yield. They raise the dividend every year. Safe payout ratio. Making net income every quarter and more net income than the analysts thought. So hey, they're interesting. All right. What is this one here? James said thoughts on SLI. Standard Lithium. Oh, and FICO. Oh, hey. Yeah, we'll look at FICO. Yeah, we'll do that one. Oh, and Sprouts Farmers Market. Yeah, we'll look at Sprouts Farmers Market after this, and then we'll get to FICO. And then, Main Street Capital, SCHD. So here's Standard Lithium. It's a stock that's kind of rallying. You know, the government just took a huge stake into Lithium Americas. Maybe this one will be like the next domino, the next one to get a stake in from the government. Who knows? Do they have revenue? They don't. That's from 2012. So yeah, they don't have any revenue right now, but a great balance sheet. You know, no debt at all. It's like a lot of assets or cash on hand. So yeah, some probably will just follow the momentum around the like whatever LAC does. What app are you using? Yeah, hey, what up, Kings? Yeah, hey, by the way, if you want, this is a brokerage where you buy stocks on. If you want to get it, it's in the link tree in my bio, very first link there. So here's Sprouts Farmers Market. I do own this one. I am here. I'll show. Actually, by the way, all these apps I'm using are all in the link tree in my bio. Oh, they're all affiliate links, full disclosure. Yeah, here's Sprouts Farmers Market. We're down 20% on my shares. So you could get in at a lower cost basis than me. This is my exposure to grocery stores. And for grocery stores, what you really want to focus on is their net margin, because Kroger is lucky to have a 2%, Costco a 3%, but this one has abnormally high margins for the industry, and that's because they sell more more healthy items. So they've had a lot of pricing power. If we go to the revenue's up 17%, but the net income is up by 40. That is margin expansion right there. That's so impressive. So I just like them. They seem really growthy, and they're also a huge buyback play. They've bought back 30% of all the shares since 2019. So I just like them. They're struggling now, but I'm a believer, you know, good fundamentals outshine in the long run. There is some risk, though. So FICO stock, yeah, they basically have these FICO scores, if anyone's heard of them. Whenever you make like a big ticket purchase, like a car or house, you know, you're paying a couple of dollars for the FICO score, and they've just had a lot of pricing power recently because no one really cares if, you know, your FICO score costs $5 and now it costs 10. No one really cares. So they've had immense pricing power. Their story is crazy. Like they did everything to get the FICO score in the system. And then in the futures, when they finally hiked the prices and the business models worked out great. But one of the reasons the stock has been struggling is because there's new increased competition. There used to be no like other score business like it. But now there's like the government's making like a score, or there's just, maybe it was Moody's. I don't know. I forget the exact news, but there's increased competition for them now. But I still love their numbers. The net income growth is really good. 150, nearly 200 mil, up 41% year over year. But there's still, the valuation is a bit high. You know, 65 times PE, 65 times net income's nuts. Here, let's see what the Morningstar here. On Morningstar, you can read what the bulls say. What did the bears say? That fatal decision will allow Vantage Score is mostly just noise, and FICO will be largely unaffected. Or yeah, so something called Vantage Score was coming out. So that's part of the bulls. That's what the bulls are saying. The bears are saying the FHFA decision will allow Vantage Score for government conforming mortgages will alter its pricing strategy. Anywho, there's a battle of the sentiment. So yeah, what was the grocery store you just mentioned? Yeah, that was SFM, Sprouts Farmers Market. Yeah. That's the stock that I'm down 20% on. So yeah. Hey, what up, Scott? Slow down. Yeah. Hey, sorry if I talk too fast. Yeah. Hey, I apologize. I try to get to every stock here. So Main Street Capital, this is one of the stocks you buy to maximize your dividend income because they actually pay you a monthly dividend. And that's because they're a BDC. They literally have to, by law, pay out 90% of their taxable income in the form of a dividend. So that's why their yield is so abnormally high, but also they're taxed differently. Whenever you receive this dividend, they're taxed as short-term capital gains and not long-term capital gains. They still print money, easily 100 mil plus a net income a quarter. So they're making 100 million plus in net income a quarter. If you go to the cost of the dividend, Where is that? Yeah, here it is. The cost of the dividend was only 84 million, so they actually have room to raise their dividend. But one of the reasons they're struggling is because if a BDC basically just gives out loans to small, medium-sized businesses, and it's been booming because in a high rate environment, it's hard for companies to get access to capital. So in a lower rate environment, it should theoretically hurt them if rates go real low. All right. I'd be careful with ET. It triggers weird tax. Yeah, ET gives you a K1 tax form exactly because ET is a MLP. So yeah, SCHD is the best ETF. Hey, yeah, SCHD. This is a dividend kind of growth ETF right here. You know, if you're 10 years away from retirement, you probably wouldn't want to touch this one. But yeah, check this out. If you go to its top holdings, it's a lot of the higher yielding names: AbbVie, Cisco, Pepsi, Coca-Cola, Chevron. You know, a lot of the Buffett type names. So you're not going to outperform the S&P 500, but it's a nice way to diversify away maybe from the tech heavy S&P 500. Yeah, if you go to Buffett's holdings right here, he has a lot of those similar holdings. You know, Coca-Cola, Chevron, you know, we got an Oxy and some of that stuff. So, yeah. Do you do options? I actually do not do options. Hey, what up, Caden? What's your pick for power grid play? PLPC, yeah, Powell Industries. I like Eaton as well, ETN. So yeah. Path will be mentioned on Tuesday. Buy Nvidia. Hey, you know, I'm actually Path isn't a great company. I do own them. I want to see them do good. You know, I'm down 22% on them. So, but they don't really have a moat. They've kind of just got out innovated. The CEO left the company, cash grabbed, looked terrible. So, but there has been some good news and good sentiment recently because yeah, they're partnering with Nvidia, they're partnering with Snowflake, they're partnering with some other companies, but they're too cheap to sell. Like I wouldn't. I wouldn't. They're interesting, and I like the momentum right now, but I wouldn't have it as a huge size position. Like it's just they're still not even really. They're not making money yet, but probably the same by the same time next year they're going to be making good net income every quarter. I don't know. They finally got out. They were growing single digits. I mean, I'd be careful with that one. Wouldn't have it as a huge size position. I don't have too much faith in that one, but I hope they do good because I'm a shareholder and I'm down on them. But yeah, I've been holding UiPath. Look at this. If you look in the bottom right there, the very bottom right, it shows like the date. I was buying UiPath in 2021. I mean, this was seen as like the original robotics AI play, but they weren't. Okay, so let's check this out. Yeah, hey, remind me remind me to look at Microsoft. Actually, let's just go over Microsoft right now. MSFT. So we'll be quick about this one. Yeah, Microsoft reports earnings the same day. Meta reports earnings. So it'll be a fun day. We'll be streaming. Yeah, if y'all want to hit the follow button, we stream every day. Hey, Caden, what up, dude? Yeah, the VIX. Yeah, that's the volatility. I don't think you can buy that. That's not an asset you can buy. Right? But we can look at it though. Check this out. We'll talk about what that is because that'll be interesting. So here's Microsoft right here, though. Here's their best business, their productivity and business solutions. If you heard of, OneDrive, PowerPoint, Word, whatever, Microsoft has converted from a hardware company to a software company selling S&P 500 companies, these software schools. So yeah, this is over 120 billion of annual revenue for them. And they also just rose their prices for the Microsoft 365 products. And they're not just, software play, but they're also a huge cloud play. Here's their intelligent cloud, Microsoft Azure Cloud. The revenue growth is insane. It's up 25% to a new record, 30 billion. It's also over 100 billion of annual revenue for them. Microsoft is according to S&P Global Moody's, a safer investment than U.S. Treasury bills. Higher credit rating. They're easily making 25 billion plus in net income a quarter. And look at these growth rates. It's just insane. So I love Microsoft, and you get a nice growing dividend. They're like the toolkit of AI. Like every company in one way or another uses them. So yeah, here's a VIX right here. Or the .VIX index right here. Basically, whenever there's volatility, like there's 2008. Whenever there's volatility, that spikes up a bunch. There is like a SOLV. Wait, SVOL. This is a ETF that sells calls on volatility. It's a covered call ETF. Notice the dividend payouts go down every year, but that's one way. But yeah, it tracks the put call ratio. Hey, what up, Bo? Appreciate that. All right. Phil, I bought Crestwood and ET a few years back. Yeah, hey, the thing with ET super quickly, this isn't a stock. It's actually you're buying units because this is an MLP, which stands for Master Limited Partnership. And since you're now a partner, you're not a shareholder, you're a partner in the company. And since you're a partner, you actually get a K1 tax form. So you're basically just buying this to maximize your income. And because they're structured as an MLP, that's why their yield is so high. That's why they have basically 10% or 8% dividends. So yeah, but I avoid it just for tax simplification purposes. Yo, what is Syndex? Give me the ticker symbol for that stock right there. We'll check them out right there. Charlie said NTWK. That is NetSol Technologies. Well, this is a $50 million company, an extremely small company. What do they do? Let me check this out right here. So, software and applications. Well, do they have sales? They do. So they have they did 18 million of revenue and they did 3 million of profit on that. So they actually made profit that quarter. That's really interesting. The fact that they're net income positive so quickly. Where are they headquartered? Oh, so look at this. China's 25%, UK is 23. Where are they headquartered? In the US. So they're headquartered in the US. I mean, hey, low key, if they can keep up this net income positivity like they made net income the past 2 quarters, and that was real, they really did. I mean, there's no analyst expectations or there's no analyst forecast here, but it looks like some international software play. You know, the US is only 16%, and there you get a lot of other companies. Anyway, they're interesting. Thoughts on BTBT? What up, Joseph? So, Bid Digital. Hey, this is just like a Bitcoin mining company, I believe. Oh yeah, hey, actually, they converted. I think digital asset mining. Let's actually go back like a couple years, maybe. I think it used to just be, yeah, digital asset mining was half of it, but now in the most recent quarter, cloud services have taken over. So they've basically this is a company that just we've seen this a lot, a company with a bunch of GPUs. They had a bunch of GPUs. They used to mine a bunch of Bitcoin with it. Now they've converted from just mining Bitcoin to cloud services, server hosting. And look at the expectations. Revenue is supposed to go from 25 to 36, but no real moat here. I mean, that's where we're seeing every Bitcoin company do that. We're seeing HUD 8 do this now. I think Marathon's getting into it. So it's just a company with a bunch of GPUs, and you can probably follow the momentum of Bitcoin and probably AI and related stuff. So. Um, Wait, VEDL. What is VEDL? Then we'll look at SNDX right here. I typed in VEDL, the data. I can't find that one. Let me type in the name. VEDAN, Vedanta. Oh, so this is, there's no volume on this name. Yeah, we won't cover this one. They're lower. If you bought the stock in 2003, you're down on your position. Yeah, the huge decline. I don't know about that one. Sorry, can't cover that stock, unfortunately. SNDX stock. So this is Syndax Pharmaceuticals. Another really small one. They're only worth $1 billion. Let's check out the numbers. Let's see if it's something I trust. So, looks like they just now started selling something. Yeah, they did 37 million of sales. That's very interesting. 37 million of revenue. A huge beat. Analysts expected 26 million. And notice analysts are expecting in 2 quarters 64 million. They're still expected to lose net income, but I mean, that's a lot of growth expected in the future. So as long as they can keep beating on revenue expectations like that, they're interesting. I probably wouldn't trust a meaningful amount of money in this one. Again, let's see. They lost, they're losing close to 70 to 100 mil of net income a quarter. You know, when you lose 100 mil a quarter, that's, 1/10 of your company pretty much. They're losing a quarter. It's rough. So, yeah, we really want to see the growth start to come back. G said OC stock. Oh, yeah, Owens Corning. This is a great stock, I think. They're really interest rate sensitive, but if you've heard of like Pink Panther Insulation, they own that. So they're a home builder adjacent play. Roofing is 47% of the revenue. Then insulation, Pink Panther Insulation, that's down 4%. And then doors, they sell doors as well. So just commodities. They're They had a little one-time adjustment this quarter. It was from like their like I don't even remember like payouts from like I don't know, but if we could, there was a one-time adjustment. If you go to their operating profit, the core business is still easily making a couple hundred mil in net income every quarter. So as rates go down, this one should benefit as well. You get a nice yield too, a 2% plus dividend. They raise the dividend every year, safe payout ratio. So Owens Corning's interesting. The PE ratio is much lower than this just because of the one-time adjustment they had to their net income down here. Yeah, wow, they're actually trading at like 10, like 15 times net income, like half that. That's crazy. So, yeah, hey, Kaden, we already looked at VIX. I typed this in. Um, that's not the dot VIX. I can't find that one. So TeraWulf, yeah, hey, that's basically I think another Bitcoin mining company. Yeah, TeraWulf right here. That big Google basically saved this one. Google had like debt with them that they converted to shares. Or if we go to the shareholders of this company, oh wait, actually no, I'm thinking of a different company, not TeraWulf. So or maybe that's Wolf Speed. Wait, let me verify that. Wolf Speed, maybe am I just like not smart? All right, then I don't know what I'm talking about. Google had a stake in some sort of company. But anyway, let's go look at yeah, TeraWulf right here. Wait. Um oh yeah, Google invested in Wolf. Then maybe it was this one. Dude, maybe I'm crazy. Google might have sold their stake in this company. Decrease? Um I Google was legit the top holder here. Anyway, I don't care anymore. Let's just go look at their. Oh yeah, if we go to where the revenue comes from, check this out. It says 100% of the revenue is digital currency mining. So yeah, there used to be a Bitcoin mining company that I think is converting, kind of like a lot of the other names, to a cloud server hosting kind of business. So revenue is supposed to go from 34 to 66, supposed to double year over year. So that's probably why the stock's momentum being higher. I'd still be super, super careful with this one just because the fact that if you go to the net income, still, well, they don't lose much money compared to their market cap. But yeah, and there's growth. So I just be careful with that name. Oh, hey, what up? Who is Hardy? How's it going? What do you think of BURU? BURU and B&B? Wait, is that Airbnb or is that the crypto? We're not going to cover the crypto. Oh, yeah, we probably won't even cover this name either. If we look at the market cap, this is a $50 million company at all-time lows. Market's at all-time highs. This is at all-time lows. They're worth $50 million. And they have no revenue. I mean, the revenue was 9,000, down 97%. Look at that. They have no assets. The assets are 2 million, and look at the liabilities. The liabilities are the same as the market cap. So, and they lose 10 to 15 mil a quarter. This is like textbook. Like, I can see why they're at all-time lows. Yeah, I wouldn't trust that one. I'd just be really careful, just because those numbers right there. I mean, just know what you're investing in just from those numbers. Wait, KRMN. Carmen Holdings. Wow, look at that. They're at an all-time high. So why are you dodging SoFi? Hey, we've already looked at SoFi like 3 times today, so we probably won't look. We just looked at them, so we probably won't look at SoFi again. And by the way, if you missed anything, I'm also streaming on YouTube. My YouTube channel is called Nathan Roberts, also in the link tree in my bio. But yeah, you can just type into YouTube Nathan Robert. What's this app? Oh yeah, but also in the link tree in my bio is this. By the way, this is a brokerage. It's where you buy stocks on. If you want to get it, it's in the link tree in my bio, very first link there. So yeah. It is an affiliate link too, full disclosure. So if you go and like deposit $100, we'll both get some free stocks. But yeah, my favorite brokerage is free, doesn't cost anything, no fees. So anyway, if we go to Carmen right here, they're at all-time highs. That's because they're a aerospace and defense company, and the growth has been very nice. Check out the analyst expectations. Analysts expected 104, well, they did 115 mil. Nice little beat on revenue. Again, they just IPO'd basically a year ago, but they're beating on expectations. Sales are growthy. So looks like a small, and their net income positive. Actually, that's really impressive. They're making net income every quarter on such a small amount of revenue. So that is impressive, actually. Yeah. I'll actually put them on the watch list. Hey, what up, Mr. R Stock? How's it going? Probably said your name wrong. I apologize there. What up, guitar guy? How's it going? Hello. Where also do you stream? I'm only streaming on YouTube and TikTok. So, yeah. Hey, Jay Solo, thanks again for the gift there. I do appreciate that. Pierre said race. Yeah, hey, let's look at Ferrari stock. It's one of my new positions here in this portfolio. So if we look, that's where I was buying my shares. Those little green buys are my buy orders. And I didn't buy this company just because they're on the dip. I bought this company because they're a good, high quality one, in my opinion. So if we go to their net income down here, this is what I want to see in a company. They're easily making 400 to 500 mil a quarter, and it just hits a new record every year, every quarter. Like if Ferrari has some inflation or tariff costs, they're the type of company that can raise prices and their consumer will pay it. Like their consumers aren't affected by inflation. Their consumers are recession resistant pretty much. They're already millionaires. We see the dividend, they raise their dividend every year. It's like a unique way to get exposure like premium pricing power. It's an international play as well. The US is only 29% of the revenue. Then they're in all these other countries as well, which is cool. So yeah, like a lot of their cars are backlogged for multiple years. They get a lot of sponsorship revenue, so I like them. All right. Venture Global. Hey, what's the ticker symbol for Venture Global? CCOI? Is that a? Oh yeah. Hey, we were just looking at this stock. Yeah, this is a dividend trap. Yeah. Hey, please stay away from this stock. It is very junk. Basically, they have a 10% dividend yield, but they lose money. They can't afford it from net income or by free cash flow by a wide margin. So yeah, wouldn't touch that one. Hey, what up, Luffy said RMD stock. So this is ResMed. They're actually on my watch list. I forgot why I put them on the watch list. So let's go check it out, actually. So let's see. Sleep and breathing health. That's something everyone can appreciate. They're growing quite nicely. Check that out. The revenue's up 10%, after it grew 9, after it grew 20. So that's growing nicely. Residential care software. Oh, so they have a software as well. High margin software play. That's interesting. And they're making it, wow. They're making great money. 300 to 400 mil of net income a quarter. We can see their net margin. Oh, hold on. I'm going to block this guy. Hey, try not to spam in the chat here. That's not cool, man. Come on. All right. So RMD, this is a crazy net margin. I mean, easy. They're basically 30% net margin. That's insane. And the net margin is growing as well. I'm going to re-add them to the top of my watch list. This is great. They have a fortress balance sheet as well. Look at the cash. It went from 220 mil to 1.2 billion of cash. That is insane, the growth. Let's go look at some of their key indicators right here. Gross margin of 59, net margin of 27. Their tax rate is a 16%. What's their ROIC? Return on invested capital is a 22%. That's a great company, and you get a 1% yield. They raise the dividend every year. I can see why the stock has done so well. Okay. Dawn said AIFF stock. Let's check this one out. Oh, Roblox. Yeah, we can look at Roblox too in a minute here. So Firefly Neuroscience. Yeah, we're not really going to cover this name. This is a $27 million company at all-time lows. Yeah, hey, we just don't really cover these names, unfortunately. They looks like they have some revenue, but the revenue is 200,000. They lost 12 million last quarter. Again, the whole entire company is worth 27 million, and they lost 12 mil. That's devastating. This probably has real bankruptcy risk. I can see why it's at all-time lows. Yeah. Just like it's hard to trust that with real money. You know what I mean? Like sometimes you just gotta it's hard to trust it. What was that last stock? Oh, that was RMD, ticker symbol RMD stock. So here is, and by the way, if you missed anything, I'm also streaming on YouTube. You can replay it. Sorry, I talk too fast sometimes. Oh, hey, remind me to look at Circle and Roblox. I want to get to these. So here's Venture Global right here. Yikes. It looks like they had a nasty gap down, but there's no earnings day. There was no earnings, or was it? Or no, yeah, there was no earnings on that day. So, Plaquemines project, Calsu project. I think this is some maybe mineral company, oil and midstream. So yeah, looks like some oil and gas company. The revenue's up nice, 3 billion of revenue. Wow, where are they headquartered? They're headquartered in the U.S. Venture Global. Maybe we can click on their website right here and see what they're doing. Oh my goodness. Yeah, hey, deny. Low cost LNG to the world. Oh yeah, there's I guess their Plaquemines project. Wow, that's a big project. Check out. Oh, these are renders. Anyway, looks like some LNG play, oil and gas play. Interesting. Okay. Yeah. Great. I am investing in tech so far. I started in my late 40s. Unstable internet connection. Stream will disconnect. Uh-oh. Well, hey, if the stream starts to lag, it's my fault, not yours. Uh-oh. Yeah, hey, by the way, if you want to hit the follow button, we stream every day. We'll be streaming in exactly 7 hours from now. If you look in the top left, it's basically 12:50 or it's 1 p.m. I'll be streaming at exactly 8 p.m. tonight when the market's open. So basically in exactly 7 hours from now, I will be live as well. So yeah, by the way, I saw nothing. I have no course, book, WhatsApp. Watch out for people impersonating me. So LYG stock, this is Lloyd's Banking. So yeah, we'll look at Rich Tech Robotics after this. I don't love that one. I know there's some like showcase event they're doing to investors in a week or so, or I don't know. But I can't find you on IG. Yeah, hey, I don't have an Instagram. I don't have a Twitter. I don't got nothing. The only thing I have is a YouTube channel. Yeah, I don't got none of that. So yeah, anyway, here's Lloyd's Banking, a $67 billion market cap. And yeah, they still haven't recovered from the 2008 crash. But let's go look at the right now numbers because they've done incredible the past year. So the yield is a 3.7% dividend. Nice. So they raise their dividend every year. And unallocated. Wait, what industry are they in? Oh, I guess banking. Yeah, regional bank. But where are they actually headquartered? Oh, the UK. So this is a UK bank. All right, let's check out their net income though. So they're easily making 1 to 2 billion in net income a quarter. So let's just say they're making 1.3 bill of net income a quarter. Let's go see how much the dividend cost. The dividend cost 1.75 billion in net income this quarter, which is the dividend change every quarter. Oh, so that's why it was stagnant. They changed the dividend every quarter, so it's a different one each time. Anyway, but the annual yield goes up. They really, I don't know. The U.S. banks might be better. It looks like they've underperformed. Like J.P. Morgan, Goldman Sachs, like have smoked those by far, and just like um. But yeah, it looks like that's your UK bank play. Wait, BELFB. Wait, BELFB stock. Okay, Belfuse B. Hey, they're at an all-time high right now. So congrats if you own this stock right here. You know, you got to be up on your position. What industry are they in? Power solutions and protection. Hey, that seems niche. You know, that seems something like it's in demand right now. Connectivity solutions. Yeah, this sounds like a smaller Amphenol. That's interesting. And magnetic solutions. Hey, 67% of the sales are in the US. They're making net income every quarter, so it's a profitable company. Sales are up 26. So they had like a 10% net margin or 15% net margin. I can see why they're doing so good. It's probably just this industry right now that's on fire. I think they're an international player. They're not headquartered in the US. So yeah, hey, I wanted to get to Roblox as well. So honestly, you know who owns a bunch of, and Coinbase as well, Mason, check this out. If we go to Kathy Wood's portfolio right here, you know, her third largest holding is Roblox and her fourth largest holding is Coinbase. So let's just do Roblox right here. There's some things I like and some things I don't like about this stock. Yeah, hey, Yan said, wow, there's a Nathan guy that's trying to impersonate you. Yeah, hey, yeah, watch out for that. I'll never follow you, DM you. I'll never follow you. I legit sell nothing. I have no, not in a mean way. Not in a mean way. I won't follow you, but yeah, I won't follow you, DM you. If you follow me, you might get followed by someone impersonating me. I sell nothing, of course. So anyway, here's a cool metric we get on Roblox right here. This is their daily active users. It's so cool. They have 111 million daily active users. If we go to the exact same time last year, they only had 79 million daily active users. So their daily active users are growing like crazy. But here's the thing that keeps me away from Roblox is the fact that they're still burning through a lot of money, like legit 200 to 300 million. The trend isn't getting better. They lost 35% more net income than the previous year. So they're losing 300 mil a quarter and they're a bit leveraged, pretty much the same amount of liabilities as assets. So that's what I don't love, but I can see why the momentum has been so good because the sales are really growthy and their daily active users are really growthy. Let's hope it's not propped up on like AI bots, but yeah, I like that. AWS outage disrupts Roblox. Florida Attorney General issues over Roblox. That safety concerns. Yeah, I know. What happens? Oh yeah. Hey, by the way, this is a brokerage where you get stocks on. If you want to get it, it's in the link tree in my bio. The very first link there. Could you do L stock? Wait, Loblaw stock. So, whoa, that's an insane performer on the daily and weekly chart there. They're headquartered in headquartered in Canada, so we'll convert the Canadian currency to USD. So now we'll see this in US dollars. Net income is, yeah, they're making a couple hundred mil, basically 500 million in net income a quarter if you kind of average it out there. What's their net margin? So 5% net margin. They're a retailer. It looks like retail. Anyway, the stock's done phenomenal. Is there any news down here? No. Anywho, I wish I could give you more thoughts on them. You get a 1% yield here as well. The largest Loblaw is Canada's largest retailer, operating approximately 2,500 food, retail, and pharmacy stores. So there you go. It's like a retail defensive play. Interesting. So AMD stocks. So someone said, is AMD too highly or is NVIDIA, AMD is high valued, NVIDIA is also high valued. Okay, so yeah, here's the thing with NVIDIA and why, if you're looking for a semiconductor play, here's why I chose NVIDIA or AMD. Hey, does SoFi beat earnings every time? Yeah, hey, Raven, remind me to look at SoFi. We'll probably look at them one more time. But yeah, here's NVIDIA. If you look in the top right, the market cap of NVIDIA is worth 4.5 trillion. You know, just because the law of large numbers, I think it's going to be a hard double. You know, if you buy a share of NVIDIA right now, you just buy a share, for you to double your money, for you to be up 2x, you know, they would have to be worth $9 trillion. That's actually why I chose AMD as my semiconductor play, because I think it's an easier double. You know, they're worth 400 billion, but still both will do great together. You know, AMD's smaller, but they still have done just as well. I mean, both are AMD's more overvalued than NVIDIA right here, but yeah, they should still rhyme together. But here's some of the metrics we get here. They have a huge GPU market share, you know, 24% GPU market share. They have an automotive software, you know, Lucid uses NVIDIA's automotive software. But here's the reason why NVIDIA is worth, you know, 4.5 trillion. They print money. Check this out right here. They legit make 26 billion of net income just this quarter. I mean, that's incredible. Up 60%, after grew 169, after grew 850. Like, they're on a streak of growth on their net income. So that's what I love about NVIDIA. And super small, you know, they have a dividend, the payout ratio is only 1%. But yeah, I think I would buy the NVIDIA ecosystem beneficiaries, like, you know, buy Cover Systems, the one that cools down the servers, you know, buy Amphenol, the one supplying NVIDIA their copper cables, you know, maybe buy Super Microcomputer, the one that installs their servers for you, that gets direct shout outs from NVIDIA. Maybe buy, you know, Constellation Energy, you know, the one that powers the data centers with nuclear. You know, largest nuclear play out there is CEG. They own 30% of all the nuclear reactors. Someone said, what stocks to check out for Monday? Here's some that I'm going to be watching. I'm potentially going to buy more Wix. After their Base 44 acquisition, they're a vibe coding play. I love it. Maybe some more perimeter solutions. I also have a share in for Vita Coco, debt-free beverage company. The beverage industry is so competitive, but this one does kind of interest me. So I'll be looking at buying some more cocoa. So yeah, that's our Roth IRA is so messy, so all over the place. I got way too many stocks. If someone said, what's your biggest critique? It said I got way too many stocks. But you know, I'm a stock picker. I love individually picking companies. And at least I haven't, like, diversification hasn't hit me yet, because all my portfolios individually have pretty much outperformed the S&P, except for my Roth IRA. But okay, someone said, say all that again, please. Yo, hey, by the way, I'm streaming on YouTube as well, so if you miss anything, you are able to rewind it on the YouTube stream. Sometimes I talk too fast. I know, I apologize. But yeah, YouTube channel is called Nathan Robert. You could just type it into YouTube, but it's also in the link tree in my bio. But yeah. Okay, so SoFi or AXP, if you had to invest in one today, I'd probably pick American Express. By the way, I do own a lot of SoFi, and I think SoFi is a great never sell. I got 24 shares of SoFi. Also, I regret every share I've ever sold of SoFi stock as well. But yeah, hey, sorry, I'm getting red numbers on my stream settings right here. So if the stream's lagging, just know it's me, not you. Hey, what up, Jello? Oh yeah, hey, remind me to look at DCTH. Uh-oh. That's not good. We should be good now. Yo, my stream just like totally disconnected, like completely, but then it came back. Okay. Sorry, guys. It says it's on yellow. Okay, we're good now. Hopefully we're good. Sorry about that. All right. By the way, if you want to hit the follow button, we stream every day. We're also going to be live in exactly 7 hours from now. So let's look at American Express versus SoFi again before it cut out. This is not good. This is not good. Hey, what up, A7? If it cuts out again, I might have to end the. Okay. Um, let's see if this is working here. So American Express, I do like them. Buffett also owns a bunch of American Express as well. If we go to the Buffett portfolio right here, uh, yeah, dang, I don't know what just happened. Let me reset my Apple Play. Oh, I'm sorry. Yo, of course we get technical issues. I'm gonna need some technical analysis on this right here. Hold up. Come on. I might actually that's so sad actually. Let me change Wi-Fi's. It's really not gonna want to. Oh my goodness. It literally says my phone is connected, but it's just not. It's not connected. Okay, I think this will work. If I do this, this might work. Okay. Yeah, all right. Yeah, there went all the viewers. Yeah, hey, I might have to just end the stream here. This is so annoying, man. All right. As y'all know, I'll be live in exactly 7 hours from now as well. Dude, are you kidding me? Last effort hope here, and if this doesn't work, then we're cooked. We're just super cooked. We'll task manager close it, but yeah, hey, yeah, the stream's good now, but I can't get my phone to connect to my. Here we go. All right, this should work now, and if it doesn't, then I give up. Hey, what up, Plasma? Yo, good to see you, Plasma. Hope you're having a good Sunday. Hopefully, a better Sunday than me. Oh, and then just disconnected again. All right, well, I'm just going to stream until it just doesn't allow me to anymore. Okay, so American Express, what were we even talking about there? Yeah, if we go back to the Buffett portfolio right here, his second largest holding is actually in American Express. Yo, what up, KAT? Yo, what up, Michael Charles? Hey, I really appreciate that, man. Yeah. Yeah, Shed, what strategy tool are you using? Chart pattern. Oh, yeah. Hey, by the way, if you want to get this app I'm on, this software I'm on, it's in the link tree in my bio, very first link there. Hey, it kind of does the technical analysis for me because as y'all know, I don't really do much technical analysis. We like looking at the fundamentals, the numbers, and we can see American Express. There's a little chart forming here. There's a bullish continuation triangle, and check that out. The rise probability is an 82% chance. So hey, that's interesting. But American Express deserves to be at an all-time high. They're a really growthy name. Check this out. If you go to the net income, they're making great numbers. Easily, 2.5 to 3 billion of net income every single quarter, and they share that with you via dividends and share buybacks. We get a 0.65% dividend. Notice they raise the dividend every year faster than inflation. So not only do you get a 0.65% dividend, but check out the dividend or the share buybacks. If you go to the net income is up by 15, but the net income per share is up by over 18. Again, the EPS growth rate and the net income growth rate should always be the exact same. The only thing that changes the EPS growth rate is the share part of the ratio. That's an easy way to tell if you've either been diluted or if they bought back shares just by checking the EPS growth rate versus net income growth rate. So yeah. All right, we should be good now. Sorry for all the oh, hey, yo, Dalton. Dude, Dalton showed up at the worst time when my stream is just crashing. Hey, good to see you, man. Yeah, hey, I actually stream every single day around this exact same time. I don't have a specific schedule, but I usually stream every day around this exact same time. On Sundays, it's a little different. We do 2 streams on Sunday. We'll be streaming also as well in exactly 7 hours from now at 8 p.m. When the market opens on Robinhood. So that'll be fun. Yeah, here's our Robinhood portfolio as well. We're up, yeah, our Robinhood account. Yeah, hey, it looks like our Wi-Fi is back now. Thank goodness. But yeah, this is our dividend-only portfolio where every stock in here pays a dividend, and we also have but we have way too many stocks for sure. But yeah, we have our risk-on account as well. Yeah, here's our open profit and loss in here. I love just being fully transparent. I go to a lot of other streams and YouTubers, and no one really shares their open profit and loss, their year-to-date, and all that. So yeah. All right, so let's look at some more stocks here now that this is working. Hey, BeatDish, no way. He said Pure Storage. Yo, this is a storage play and a subscription play. This is actually a very cool stock right here. They're at an all-time high right now. You know, this whole industry is booming. But check this out. If we go to half the revenue comes from their product sales, the other half of the revenue comes from their subscription service. This is what I love to see. This business literally just hits a new record every year, every quarter. This is what, in my opinion, justifies the stock being at all-time highs at this pretty high valuation. Because, yeah, if we go to the PE, where was the PE? Yeah, they trade at 230 times PE. Again, you really want to do a forward PE on this stock or multiple years out. But I just like the growth on this name. I love the subscription model. I probably wouldn't buy it here. I definitely wouldn't buy it at this price. But maybe I'd put it on the watch list as a storage play. Leech, what up, dude? ARAI stock. Let's check this one out. Yeah, thanks for sticking around here through all that stuff. And hey, what up, Luffy? Yo, we'll look at ELMD and LNTH. Would you recommend AMD over NVIDIA because of the market cap, right? Yeah, bro. I like both, though. Like, both should do pretty similarly. But yeah, I just like AMD. I think it's because it's just an easier double. But NVIDIA is still one I'd happily own and never sell. So here's Arrive AI. They're worth $170 million. So a pretty small market cap. Just beware. It looks like they IPO'd this year in May. So they haven't been public for too long. So we probably won't get too much data. So yeah, look at this. If you go to their sales, we only get 1/4 of data, and the revenue was only 90,000. So that, again, they're only worth 100 million. That probably explains it. But autonomous last mile platform, or ALM. AI-powered mailbox. What the heck? Check this out. Which enables secure, efficient delivery to and from a smart AI-powered mailbox, whether done by drone, ground robot, or human character. Let me click on their website right here. Let's see what they have. What are they pitching here? Some sort of look at that, a drone coming out the box right there. That's how they're going to deliver stuff. Oh well. So there you go. So it's like some startup right here that just IPO'd. It did 90,000 of revenue. I've been popping in and out of a few. Awesome to see them popping up more on my feed. Hey, thanks so much, Delta. Yeah, I try to go over the numbers on here, like show the actual fundamentals. Oh, hey, you know what? Let's do it, Jello. Let's look at DCTH, and then we'll get to ELMD and some of these other names. Sorry, I'm so behind on the chat. There's a lot of stocks I want to get to. So, guys, DCTH still good. They're still good as a super. Again, I still have my original same thoughts on this. This isn't a stock you'd ever want to trust with a meaningful amount of money. Like, I normally never really even talk about these kind of stocks, but here's what interests me so much about DCTH. Again, it's only a $150 position for me. As much as I like this one, you cannot make this a meaningful size position just because there's so much risk here. But if we look at the top right, the market cap, there were 350 million. Here's why out of all the companies worth 357 million, I like this one the most, because if we go to their cash pile right now, their balance sheet, they literally have $81 million of cash and no debt. So a completely debt-free company with worth 380 million, and they have 80 million of cash. So a huge chunk of their market cap is literally their cash. 20% of the market cap is their cash on hand. And since they have so much cash and no debt, the cash is earning interest. They literally made 650,000 of interest on their cash this quarter. That goes straight to the bottom line. And they're super growthy. Like, this wasn't a buyback a year ago. It wasn't a justifiable buy. There was so much future uncertainty, but they have real revenue now. They're really starting to prove themselves. They did 24 mil of revenue, and out of this 24 mil of revenue, they made 3 mil of net income after tax. 1 mil, lost 3 mil. Like, by this time next year, they're going to be making a bunch of money, a bunch of net income. They sell this liver kit. It's called a Heptazo kit. Again, as much as I love this stock, I can't make it a meaningful size position, but here's the kind of the scoop in a nutshell here. There were 350 million, 80 million of cash, earning a bunch of interest, no debt, making that income every quarter, growthy. So that's kind of what's interesting to me. Again, as much as I love them, I wouldn't have it as a huge size position. So yeah, what apps? Hey, by the way, yeah, all these apps I'm using are all in the link tree in my bio. Not sure which one you're talking about. Yeah, I got Robinhood, Webull. All of them are affiliate links to, full disclosure. But yeah, you can just type it into the App Store, Google, just type in Robinhood or Webull. But yeah, or this one's, out of all three of these apps, this one's my favorite just for all the analysis tools, Moomoo. Yeah, link tree in my bio, very first link there. And so yeah, affiliate link, so if you could pause at like $100, we'll both get like some free stock. Speaking of Robinhood though, someone said Hood stock. So yeah, this app right here, Robinhood, this brokerage I should say, is publicly traded, and here's their stock, ticker symbol Hood. And funny, I actually own Robinhood stock in my Webull account. It's been one of my best performance stocks of all time, and another one I regret every share I've ever sold of. We have 5 shares of Robinhood. We're up 10x on them, but here's the huge L. We sold 50 shares at $36 a share. it made sense why we did it. We were buying the stock at 8, 9, 10, and we were down for years. But when we 3x'd our money, and I was like, let me just sell most of my position. That was my biggest regret. But here's why Robinhood isn't just propped up on momentum like a lot of stocks you see out there. This one, in my opinion, deserves to be doing this well. They deserve. I wouldn't buy it here for sure. I wouldn't buy it here. They trade a 70 times net income, but we can see their net cumulative funded accounts. This is really the metric you want to look at. It was 26.5 million when the same time last year it was 24.2 million. So a nice little bump up on that, but they just make insane net income. If we look at the sales, the revenue's up 45 after it grew 40, after it grew 52. So they're on a streak of revenue growth, and not just revenue. The sales were 980 million. So they did 980 million of revenue. Out of that 980 million of revenue, 390 million of it was after-tax net income. That's insane, the net margin right here, 40% net margin. So, certainly overvalued here, but a stock that deserves to be doing this well. And I regret every share I've ever sold of it. Yeah, BURU is a pretty trash junk momentum name. Don't touch this company. I don't know what this is. Something you want to swing trade. If you look in the top right, they're worth 50 million. This is a $50 million micro cap at all-time lows. They're worth 50 million. They're revenue list. They have no sales. The sales were 9,000, and then it went to zero, so it doesn't include their quarter. So it's zero now, and they lose. Remember, the whole company's worth 50 mil. They lost 12 mil, 16, 10, and they have no assets. The assets are 2 million, 47 mil of liabilities. Just before you buy this stock, just maybe give a quick glance at their numbers. But I wouldn't call you crazy to do some sort of momentum swing trade, maybe, because I guess there's a lot of volume and momentum around this name right now, but I wouldn't trust that with anything meaningful. Yeah. So, Archer Aviation, yeah, that's another one. These are interesting, but I can't pay for like future hopium. Like if we go to their sales right here on Archer Aviation, we go to the revenue. The revenue, it says no data because this is a startup. They've never sold anything. They've never sold a product or a service. And if we go to the revenue right here, I guess analysts are expecting 1 million in 2 quarters. But I just can't pay, a $7.3 billion market cap. But what's interesting is who owns it, though. Let me see. Yeah, look at this. Stellantis. Stellantis owns Jeep, Dodge, is the largest shareholder. And ARK as well owns 5% of the shares. But again, they're just diluting the life out of you. If you're wondering how are their assets growing so much, again, they have no revenue. I didn't even know that. They're losing 100 million of net income a quarter. So how are their assets growing like this every quarter? Again, they're diluting the life out of you. They just diluted you by nearly $1 billion. But the stock doesn't react to that because, I don't know, I just can't trust that one. Hopefully that made sense. Hey, James, try not to spam there. Maybe we'll get to Fiverr. I'm so behind on the chat here. I am so sorry. Like, there's so many stocks I need to get to. Yeah, hey, what up, Red or Green? Yo, good to see you, man. I don't even know if I can get to all these stocks here. Professor Pumpkin, yeah, if someone's already said a stock, I might not get to it again just because there's new people in here. I want to get to theirs first. So here's Lanthanus stock. This one's worth $3.8 billion. So they've had some nasty, like a lot of gap downs, like a huge gap up on this day, another gap up, but then a bunch more gap downs. Well, let's go figure out what happens here. So, it's I'm guessing a prescription company or a medical, manufacturer of prescriptions. And if we look at their main prescription right here, which is 66% of the revenue, unfortunately, it looks like it just lost the growth. The sales are down 8% year over year. That's unfortunate because it used to be so growthy. These were insane growth rates. But it looks like the sales are now negative 9%. So that might explain, why they gapped down so much on earnings. They lost the growth. Let's see. So analysts they weren't expecting that. That perfectly explains the past 2 quarters, why they gapped down. A huge gap down on this day and a huge gap down on this day. They were both earning days because they both missed like crazy on the numbers. That's why I like looking at the numbers so much, because usually you could looking at the numbers explains why a stock either gapped up or gapped down so much on earnings just by glancing at the expectations here. So, yes, sales are now down by 4, profits are down by 15, so they lost their margins. But still, they're making net income every quarter. No bankruptcy risk here, but I can see why they've been gapping down on earnings. Hopefully that was helpful. Buying a Samsung, Nate. Hey, what up, Brian? Hey, I know Samsung is publicly traded. I think they're like a Korean company, though. I don't remember their ticker symbol. So Spinal said CEPT. Cantor Equity Partners. Oh, this is one of those blank check companies that just bought a company. Basically, yeah, so it's a blank check company, which means they just buy a company and then that's now what they call themselves. So I don't know what they just bought, but yeah, we can see the assets just went from 160K to 240 mil. So they bought something. Maybe it was quantum related, maybe crypto related. Maybe it looks like crypto. I don't know. I wish I could give you more thoughts on them though, but looks like they finally just acquired something. So, all right, let's look at Fiverr stock. Yeah, so Fiverr, nothing's really too great about this company. Well, let's check it out right here. So Fiverr, actually what I like about them is their cash position because they are making some interest on their cash. But yeah, check this out right here. Sales are up 15. They did 100 million of revenue, and they're actually losing money every quarter. So look at this. If you look at the operating profit, Fiverr loses money every quarter. But if we go to the net income is actually positive every quarter. How is that so? That's because the operating profit, again, does not include taxes, and it also doesn't include interest on cash. So they actually have a huge net cash position where they're making a bunch of interest. So that's how the operating profit's negative, but the net income is positive because it adds back in the interest they made on their cash. I'll actually show you that. If we go to the income statement, it's where you'll find that right here. They made 6 million of interest. They're making 5 to 8 mil of interest a quarter. Okay. But yeah, we kind of just want to see them get profitable, like the actual core business. But yeah, Fiverr, it's like we pay $5. It's like a freelancing kind of like job. Luke said CULP stock. Okay, Culp, and then we'll try and get to what if I start today? After 1 year, where will I be? Well, here's the thing with the market. Stocks doesn't get rich quick. It's actually to slowly build and preserve your wealth. With the market, you should just get 8 to 10% returns a year. The goal is to put in $100 and it turns from 100 to 108, then 108 to 120, then 120 to 150, and it kind of snowballs up. Compound interest, eighth wonder of the world or whatever. But anyway, here's Culp. Oh yeah, we won't really cover this one. They're at an all-time low. They're worth $50 million. They're at an all-time low. They sell commodity. Looks like they sell bedding. Are they just now getting profitable? That's good news. Oh, so look, the revenue, the sales, the lifeblood of the company. The revenue's down 10%. So a lot of declines. But it looks like they're just now like getting profitable. So they are fixing their margins. But I don't know. I can see why this stock's at an all-time low and they're only worth 50 mil. They're worth 50 mil because they're losing a couple mil a year. And the sales are on a nasty decline. So maybe in a lower, yeah, look at the huge miss on expectations. Analysts expected 57. They only reported 50. So nothing's really blowing me away there, to be honest with you, unfortunately. I just, hopefully my mic is still plugged in. Okay, good. SNDK. What up, Plasma? SNDK. Then we'll get to UPS. And then we'll try and still get to ELMD2. Okay, so here is SanDisk Corp. Wow, they're at an all-time high. I mean, congrats if you own this name. You got to be up on your position. What industry are they in? Maybe aerospace and defense? Computer hardware. NAND flash technology. Well, the analysts are expecting major growth. It's going to go to 2.3 billion. The EBITDA is supposed to go from legit in just a year. It's supposed to go from 2 mil to 350 mil. So I guess there's just a lot of future growth expected here. Maybe you could tell me the news, or actually, let me just click on news tab right here. Maybe does it have AI news down here? It does. Let's see. Storage industry reports AI-driven NAND demand surge with major price hikes, and that's what they mainly produce. Oh, now it's the 30% price increase. Well, anyway, that's what I probably wouldn't buy it at all-time highs, but that's interesting. So here's UPS. This one's kind of a dividend. Oh, CleanSpark. Yeah, that's just a Bitcoin mining company. No real moat there. So here's UPS. Most people see the dividend, they're like, hey, a 7.5% dividend. That's a good yield. But here's why I think they honestly need to cut their dividend. They also kind of lost their growth. Their average daily parcel volume is down like 9% year over year. But we go to the revenue. The sales is down 2.7. So the revenue's negative. Revenue's 2.7. The net income is down by 9, which means they're losing their margins. But anyway, if we look at this net income this quarter, they made 1.28 billion. Remember that number. They made 1.28 billion. Well, the dividend cost 1.35 billion. So they literally could not afford the dividend this quarter. They could not afford the dividend last quarter. So they had to take out debt or pay off the dividends from their cash pile. And they're already pretty leveraged. So they're just not in a good spot. Sales are declining. Like, yeah, they made 1.28 billion in net income, but no, they didn't, because more than 100% of that got paid out to a dividend. So UPS is in a pickle. And they're kind of just being out innovated. Like, if you just like UPS for the industry, I love shipping. Like, you're most likely just buying them for the dividend. You don't probably like the business, but I would just rather pick Amazon. Amazon's like an ETF in one. Amazon's like UPS, a Walmart, an Oracle, a robotics play, like all in one. Subscription play, e-commerce play, advertising play, book play, robotics play, satellite play. I mean, Amazon's a beast. Okay. ELMD, let's do it. ELMD. Yo, by the way, hope y'all are having a great Sunday. If you want to hit the follow button, we'll be streaming in exactly 7 hours from now as well. So, yeah, by the way, I sell nothing. I have no course, book, WhatsApp, Telegram. I'll never, ever follow you. I'll never DM you. Please watch out for people impersonating me. So here's Electromed. If we look in the top right, they're only worth 200 mil. So a very, very small market cap worth 200 mil. But let's check out their numbers right here. Sales are up 17. So the sales are up 17 and they're making net income on that. That's actually fascinating. What's the market cap again? So the whole company's worth 200 million and they're making 2 million plus of net income a quarter. And that's real. That's real net income they're making. Really good balance sheet. Yeah. Really good balance sheet. No debt. So actually, yeah, I can see why they gapped up so much on earnings. I like them actually. The fact that they're making 2 mil of net income, I'll actually put them on my watch list. Electromed. Nice. Thanks for that one, Luffy. I appreciate that. So Francisco, what up, man? He said, thoughts on TEAM? Uh-oh. Hey, what up, SWAT dude? He said, thanks for the stream. Could you speak on your strategy around cash reserves? Yeah, hey, in this environment, if you want to buy a stock, I'm more in favor of being a little bit more cash heavy than normal right now because it's tough. A lot of value. There's so many stocks that I love that I just can't pay their current valuations, like AMD, Robinhood, SoFi. Like all trade at like 70 times next year's net income. So I recommend, nibble, like start nibbling on your positions, but don't go all in, be a little bit more cash heavy. And I don't mind being cash heavy because if you look in the middle of my screen, I have $230 of cash. It earns me daily interest, 7 cents. Okay. So let's look at team right here. This is Atlassian right here. So when do you take profits? Well, when I no longer believe in the company. Like I won't just sell a company because they're overvalued. Like I said, I think Robinhood, SoFi is overvalued, but I'm not fully selling out of them because I think they're still going to continue to win. So here's Atlassian right here. Hey, yeah, remind me to look at ASST. I got you, shoulder. We'll look at ASST after this. So here's a $42 billion company called Atlassian. I think they're like, they're a SaaS company, industry chain. Providing team collaboration. Oh yeah, Atlassian, ticker symbol team. I guess that makes sense. 41% of all their revenue comes from the US. Check out how they're beating on expectations every quarter. The orange lines with the analysts expected. They beat every quarter by a big margin. Oh wait, that was their EBITDA. That was specifically their EBITDA. I forgot. They beat on revenue. They beat on net income. So yeah, it looks like they're just now getting net income positive, or they're still not yet, but they're trending that direction. Sales are growing nicely. Revenue's up 22 after 20. I know a lot of these software names, like you look at Salesforce, ServiceNow, like these white collar ones, have kind of been struggling. So maybe the AI. I wonder if they have a moat. Does Morningstar cover this one? Morningstar Research. Oh yeah, lofty valuations. Most software vendors have focused on driving down stock-based comp. Atlassian is not there yet. Stock-based comp is high. The cloud transition. All right. So anyway, they're interesting though. Maybe I'd rather buy Salesforce, but let's look at what was it? ASST right here. Was that the exact ticker symbol? Yeah, check ASST. Okay, so this is a very small name. They're worth $750 million. So they're worth $750 million. Do they have sales? So not they report in halves. So where are they headquartered? They're headquartered in Texas, okay. But the revenue isn't much. Like that's why you gotta just be careful with this name. Like it's hard to really trust this name. It looks like there's a lot of momentum around this name. Kind of trending down now. They just don't really have much revenue. They're losing a bunch of money. So I wish I wish I could be more bullish on this one. Oh, it's a provider of asset management Bitcoin treasury. It offers its services to Discord, TikTok, and other social media platforms. What is this? We can check out their website or something, but yeah, I don't know about that one. It looks pretty risky. What do you do if you are down 20%? Do you sell? Yeah, if I think it's worth selling, there's some companies that are definitely worth taking the loss on, but some stocks like these, I still have to mention like they're too cheap to sell. I'm not fully selling out of them, like UiPath, Zoom, Sprouts Farmers Market. Like, even though I'm down, like no, I don't sell them. Okay, let's see. Fabi said Innodata. DeFi, yeah, DEFT. This is some other like DeFi Technologies. I don't think this one has any real numbers. Wait, let me check right here. Revenue. The revenue looks choppy here. Like, how did the revenue go negative? The revenue and the net income look pretty identical. Valor, crypto treasury, Solana Reserves Company. I don't know. Looks like, what are they worth? Another $700 million company. I'd be careful with those. One more, another company that I unfortunately don't have anything good to say about is CleanSpark. I've looked at all the Bitcoin mining companies out there. If you're wondering what does CleanSpark do, well, if you look in the middle of my screen, it says where they get their revenue from. Bitcoin mining. So it's just literally a Bitcoin mining company. I mean, I don't know who's buying these, but they just never outperform actual Bitcoin. So there's not, like, sometimes, like, it's short term. This is probably why people like them. Like, short term, look at that, it has outperformed Bitcoin, but in the long run, like, there's no scenario where I'd recommend CleanSpark over actual Bitcoin as like a more quality hold. So I've looked at, it's not just CleanSpark. I'm not bagging on them. I've looked at all of them. I've looked at Marathon. I've looked at HUD 8. I've looked at Core. Like, look at Marathon as well. Look at where Bitcoin is and look at where Marathon is. It's not just them I'm bagging on. So just don't get mad at me. But I mean, I don't know why you'd rather own a Bitcoin mining company over actual Bitcoin. I think people have just been marketed into like, but okay, let's see here. Iris Energy, IREN. So this is an interesting one because they used to be a Bitcoin mining company, but they've converted. This is what we're kind of seeing with some of these Bitcoin mining stocks, but they're converting into data center hosting. So honestly, this one is more. They have a lot of growth behind them, like unexpected. Like they kind of deserve to do this well. They're certainly overvalued, certainly wouldn't pay their current price, but here's kind of what justifies this. If you look at the revenue, this is so crazy. The revenue's up 230 after it grew 104. Like, the revenue went from 180 mil, from 50, from 27, from 15. So they're on a streak of growth, and not just revenue, but also net income. They made net income the past 3 quarters. So that's why I think people are really liking Iris Energy. I think they've also had some partnerships with, like, I don't remember. Pivot to AI data center power solutions. I guess there's no news. Okay, anyway, they're interesting. AIRO. So Arrow Group. Hey, this one's actually on my watch list. And then we'll look at Netflix stock or Verizon. Hey, yeah, we'll look at those too. Hey, we're not going to look at Buru. That's some junk. We've already looked at them a few times. But yeah, here's Arrow Group. Stay away from BURU. Completely trash company. Potentially a short though, but this is a company worth $470 million. Let's see what they do. So they do drones. Check this out. 90% of the revenue is from their drone sales. And look what the analysts are expecting. So if you go to the right now revenue, the revenue was $24 million this quarter. Check out what analysts are expecting in 2 quarters. They're expecting $54 million. So that should be interesting to see. Do beware. It's not a bad thing. It's basically all the revenue comes from EU, comes from Europe. So that's interesting. All right, that's Arrow Group. They just IPO'd too, so there's probably some lockups you got to watch out for where the insiders will put a bunch of sells on the order book and crash the stock. But let's see. Oh, ASTS. What up? Yeah, ASTS stock right here. This is ASTS Space Mobile. If you're a shareholder of this company, you're really watching out for the next 6 months here because check this out. If we go to their right now revenue isn't good. It's $1 million of revenue, but check out what happens or what the analysts are expecting the next 2 quarters. This is why the next 6 months are super crucial if you're a shareholder. Revenue was $1 million. It's supposed to be $22 million next quarter. And the quarter after that, $35 million. They're going to be doing literally they're going to go from a year of doing 2-3 mil of revenue to like over 150 mil of revenue. So just a lot of future growth expected. Any miss on those? So you're just in for a roller coaster in the next 6 months. Just be careful. So here's the thing with Verizon. If you plan to retire if you plan to retire in 10 years, don't buy Verizon. Like if you're far away from retirement, don't buy this one. Verizon stock is the same price that it was in 1997. So think about that. You bought the stock in 1997. It's the same price as it is today. You're basically buying this to maximize your dividend income because you get the 7% dividend yield. But yeah, and I'm not just bagging on Verizon. I mean, if you look at AT&T as well, if you look at AT&T stock, like did you know AT&T is literally the same price that it was also back in 1997? Another one that you kind of just buy for the income. So I don't love those names unless like if you're far from retirement. So is Canada bread cartel for pricing the entire nation spread? Yeah, hey, they were the largest Canadian retailer, it said. Let's pull it. Yeah, we can find Samsung here. SAMSUNG. So actually, maybe we can't. Nah. These are all ETFs right here. I just want to find Samsung stock, bro. Oh my goodness. Yeah, I don't know if I'm going to be able to find Samsung. Just because this app wants to not give me the actual result of what I type in. Okay, oh well. Wait, SMSD, he said? Yeah, SMSD, Samsung, yeah, all right, whatever. We can't look at Samsung without the actual ticker symbol. Okay, let's look at some more here. Oh, Nebius stock. Yeah, hey, you actually know who owns Nebius? Is actually NVIDIA right here. If we go to the NVIDIA portfolio, their largest holding is CoreWeave, APLD, but then they also own some Nebius stock. Also, Nebius just had a huge deal with Microsoft. Let's see. Oh, and also this right here. Uber and Nebius invest $375 million into AV Ride. That does it's a company that does robo-taxi services on Uber Eats in Dallas and Austin. So that's cool. Microsoft and Nebius perform strategic partnerships. So yeah, they had a $17 billion GPU deal with Microsoft. That's actually why they gapped up on this day so much. There was no earnings this day. It was just the day that they announced the huge deal with Microsoft. And also, even before that deal announced, they already had great numbers. Check out the growth here. Like the revenue went from 15 mil to 100 million. I mean, that's some insane growth of the revenue year over year. And look at what analysts are expecting. 100 mil this quarter, it's supposed to be 265 mil. So I wouldn't buy it here, probably overvalued, but they're a real just like pure growth company. SSNLF. Yeah, that is the right ticker symbol, but not for this exchange, unfortunately. 005930. Wait. 005930. Yeah, they just don't want to make it easy for me. What site are you using? Yeah, hey, what up, DH? Yeah, by the way, this is a brokerage where you get stocks on. If you want to get this brokerage I'm on, it's in the link tree in my bio, the very first link there. Oh, yeah, hey, and if you're on the YouTube stream, it's in the link in the description. But if you're on TikTok, it's in the link tree in my bio. Yeah, they ask you for a bunch of information. It's a brokerage, By the way, all these brokerages are all in the link tree in my bio. I don't know which one you wanted there, but they're all in the link tree in my bio. I just like this one the most because that we've been using this one because it's the most useful for analysis tools and it's free, no commissions at all, costs nothing. So yeah, if you want to get this one, link to my bio, very first link there. And full disclosure, it is an affiliate link. So if you go and deposit $100, we'll both get a fractional $20 piece of NVIDIA. Okay, so hey, Morningstar stock. Yeah, did y'all know Morningstar Research or the Morningstar company is actually publicly traded? The stock is the same price that it was in 2020. So the stock's been flat for 5 years. On this app, this brokerage we're using. Look, I get though. Look, there's no Morningstar research on Morningstar stock. That's funny, but yeah, they created the moat. If anyone's heard of moat before, that was kind of created by Morningstar. They traded a fair valuation, 23 times PE. Let's see that. Right? So they must be profitable. Yeah, these are great numbers. If you average it out, they're pretty much making like 100 million of net income a quarter, especially at this growth rate. They're going to be making that. Do you get a dividend? You get basically a 1% dividend, safe payout ratio. They raise the yield every year. So yeah, Morningstar Direct Platform. Looks like the sales have just started to slow. That might be why. Yeah, that's probably why the stock is kind of trending down. The revenue's up 5, 7, 9. Like the growth rate is slowing. It used to always be double digits. So that might be it. I don't know. But yeah, they're interesting. DDI stock. Hey, what up, Aaron? DDI. Hey, yeah, we'll try and get to G. What up, Harvey? Yeah, try not to spam there. We'll get to GITM too. So Double Down Interactive. So let's check this one out right here. So this is a $430 million company. They're on my watch list too. Oh yeah. So if you look at the very top there, it's because they're in this industry. Look at that. I can't say that industry because every time I do, I get in trouble. But this is interesting though. I don't love this industry. I never touched this industry as in terms of an investment, but here's the most fascinating part. Remember this number in the top right. The whole company's worth $437 million. Remember that. The whole company's worth $437 million. They have $480 million of cash and no debt. So $480 million of cash, no debt, and they're making $20 million of net income a quarter. Again, the sales are negative year over year, not good numbers. Revenue's down 4, net income's down 34, margins are collapsing, but it's that net cash position that really interests me. Again, I hate the industry, but that net cash position is crazy. Let's see, where are they headquartered? Oh, so do beware. They're headquartered in Korea. So maybe they don't pay taxes or something, or they're taxed differently over there. But yeah, headquartered in Korea. Let me check out their tax rate if we get that. Tax rate, yeah, 26%. They do pay tax. Let's see. GITM. What's this one? GITM. I type in GITM. I can't find that name, unfortunately. Super. What up, dude? And oh wait, George said AAON. Then we'll look at KVU and then Spotify. We'll check out all these. Wait, AAON. So this is. Oh, they're actually on my watch list too. So they've been doing very nice. Check that out right there. Yeah, Harvey. I tried typing in the ticker symbol. I couldn't find it. Maybe I typed it in wrong. But GITM, I couldn't find it. Yeah, this is a $9 billion company. Let's go see what they do. So AAON Oklahoma, BASX, Coil Products. Let me check out the industry over here. So building products and equipment, sale of air conditioning products, or let me just click on their website right here. Let's see. Leading charge of advanced HVAC innovation. Okay. Well, anyway, let's go look at their numbers down here. So, I do like this industry. It's like a comfort systems, but it looks like the growth just went away. The sales are negative 0.64% year over year, and the net income, they are still net income positive. That's the good news. They're net income positive, but it looks like the growth went negative, and the net income fell by 70. So the margins just tanked. They used to have 15% margins. Now it's only at 5. So that's a little weird. All right, so let's look at KVU right here. KVUE. So this is the company that owns Tylenol. And they've been in the news recently. And another unfortunate thing is they're in the news about their baby powder. Their Johnson & Johnson brand baby powder now causes the C word, unfortunately. So being accused of that. So there's just a lot of negative sentiment. But even before the Tylenol news, by the way, they own a lot of cool brands. Like they own Neutrogena, the health skin thing. Neutrogena. They own Band-Aid. They own Listerine. A lot of consumer products. But they just even before this Tylenol stuff, this wasn't a company I probably want to buy. The revenue's negative. Sales are down 4. After this used to be owned by Johnson & Johnson. They spun it off with more debt than I would have liked to. But if we look at the net income. Here's the tough part as well. They made $420 million of net income this quarter, and the dividend cost $393 million. So yeah, they could afford the dividend, but they only retained $20 million. And quarter before they couldn't afford the dividend, quarter before they couldn't afford the dividend. So they need to at least make 400 mil of net income just to afford the dividend. And I always want to see a company make more than 400 million in net income. What happens? Yeah, hey, but again, yeah, this is a brokerage right here. Yeah, it's a brokerage called Moomoo. If you want to get it, it's in the link tree in my bio, very first link there. Yeah, it's a brokerage. Of course, they ask you for a bunch of information. Someone was saying like, yeah, again, like if you like double your money on a stock, make a bunch of money on a stock, you got to pay taxes on it. So, oh yeah, hey, thanks for that. Yeah, try not to spam there. Yeah, dude, that's not cool. Come on, man. Thanks for muting him, Millers. Okay, so, let's see here. Yeah, link tree in my bio, very first link there if you want to get this brokerage I'm on. That's what I was going to say. So SPOT, Spotify, this is a cool stock actually, but I don't love them. They don't actually own their music, but I like, and they're kind of in a commodity. They're competing with Apple Music, YouTube Music. I actually used to have Spotify, but then I converted to YouTube Music because it's part of my subscription, and they literally look identical. Like everything you can do on Spotify, you can do on YouTube Music. You can also do on Apple Music. So but their numbers are great. Here's the thing. We can see their monthly active users. They have 690 million monthly active users, and 400 million of those are ad supported, and the other are actual premium subscribers. So they have 276 million premium subscribers, and it makes them a lot of net income. They had a little one-time adjustment this quarter. You see how it says they lost 100 million in net income. They didn't actually. They're actually making basically 400 million in net income a quarter. The net income grew by 67% year over year. But yeah, I love them for the growth, but the valuation is just too high. But these kind of stocks always trade at high valuations. You look at Netflix, you look at Life 360. Actually, Life 360 looks very interesting. So, yeah, hey, GJ, if you have a ticker symbol, what's the ticker symbol for Rain Metal? If you give me the ticker symbol, I'll check it out for you. I don't know what that is. Okay. Ooh, SOU. Hey, what up, Bulls Basic? How's it going, man? So SoundHound AI, if you're a shareholder, and by the way, I got to go in 10 minutes, unfortunately. By the way, I'm going to be streaming in exactly 7.5 hours from now. So if you want to hit the follow button, we'll be streaming in exactly 7 hours from now as well. By the way, we stream every single Sunday, this exact same time. We stream every single day. Yeah, so thanks again, Kay, for that rose there. I do appreciate that. Let's check out SoundHound AI right here. If you're a shareholder of this stock, there's one thing you mainly want to watch, and that is their subscription service, because they have this AI audio software that a bunch of people pay for now. Used to be a nothing burger, 400,000 a quarter, nothing, but now 32 million in the most recent quarter, up 800% after it grew 800%. So on an absolute streak of growth on their subscription business, but they're still losing a bunch of money, like 40, 50 mil a quarter. But as long as they can keep up this growth rate, they seem interesting. So yeah, you're really just watching that subscription revenue. RHM, yeah, I can't find that one. Actually, I'll just type it in for you. RHE Rain. Okay, so here's the ticker symbol. It's RNMBY. I think this is one of those like aerospace, EU aerospace plays. So let me see where they're headquartered. And they're headquartered in Germany. So they're headquartered in Germany. What do they sell? So vehicle systems, weapon and ammunition, electronic solutions, power solutions. So yeah, 50% of the revenue is Europe. Germany or the rest of Europe, 31% is Germany. So revenue is good. They're making a couple $100 million net income. These are good growth rates as well. So looks like I know a lot of the aerospace and defense name have just been on fire recently. So yeah, looks like you're international aerospace and defense player. Another one of the big holdings in SHLD. If we go to SHLD, which is the aerospace and defense ETF, Rain Metal is the third largest holding in that, behind Palantir and Raytheon. All right. PayPal. What up, Martin? Yeah, let's do PayPal right here. So PayPal, this is mainly a share buyback play. You're not really going to outperform the market, I think, in the long run with this. But PayPal is the same price that it was in 2017. So you bought the stock back then. They don't pay a dividend or anything. So it's literally the same price that it was in 2017. They're one of the stocks that, rallied up like crazy in 2021. They look like this chart looks just like a Peloton or a DocuSign or something, or a Roku, where they rallied up in 2021 and just been down bad ever since. They kind of lost the growth too. If we just go to their revenue, this doesn't really beat inflation. Like I can see why they trade it. This is a fair multiple. They really probably should just trade at 15 times PE, 15 times net income, which is, $69. They were ridiculously overvalued up here. But yeah, if we go to the revenue, it's kind of just not too growthy. It's up 5. Last quarter was only up 1.1. Like that doesn't really beat inflation. So low, mid, single digit sales growth. But this is the best part about PayPal. The thing that I love, they're making $1 billion in net income a quarter. So remember that they're making $1 billion in net income a quarter. What are they doing with all that? Well, they're deploying it all on share buybacks. They're a major share buyback play. They do 1.5 billion of basically share buybacks a quarter. And here's what that does for you. If you go to the net income's up by 12. So the net income grew by 12. But the net income per share grew by 19. Again, the EPS growth rate and the net income growth rate should always be the exact same. The only thing that changes it is the share part of the ratio. So yeah, pretty cool. All right. Yeah, hey. Well, oh, GTIM. Good Times Restaurants. So, hey, a lot of the restaurants are doing terrible right now. You know, you just look at Wendy's, Chipotle, Jack in the Box. Let's see how they're doing, though. So, it engages in the operation of 2 restaurant concepts, Good Time Burgers and Bad Daddy's Burger Bar. Should we check out their website? Oh, my goodness. Wait, how many employees did they have? They have 2,000 employees. Well, let's check out their numbers right here. So Bad Daddies, that's down 3% year over year. And the Good Times is down by 1. So yeah, they kind of just lost the growth. Looks like they're that when we combine that, their total revenue, the lifeblood of the company, the sales are down by 2.5. And they're not really making any money. I mean, they did $1 million of net income this quarter. It's a tough one to buy in this environment. Again, it's not just them that are doing bad. I mean, just look at Wendy's stock. I mean, RIP Wendy's. Look at them. Wendy's stock is the same price that it was in 2008. You know, Wendy's is lower than it was in 1997. It's like 30% lower than it was in 1997. Same with like Jack in the Box, ticker symbol Jack. Look at them. Basically the same price as they were in 2002. A lot of the only one I'd buy is like if you want a good restaurant. First off, McDonald's is the best one, but also Yum Brands is kind of interesting too. Yum Brands owns KFC and Taco Bell. You know, I love Taco Bell, love KFC. Don't go there much, but that's another restaurant play, probably more safer one. What platform do you use to trade? Yeah, hey Williams, what up, dude? Yeah, by the way, if you want to get this software, by the way, this is a brokerage. Yeah, if you want to get this platform, it's in the link tree in my bio, very first link there. It's my favorite one because it's free, doesn't cost anything. No commissions, and it is a affiliate link too, full disclosure. So if you go and deposit $100, we'll both get like some free stock. So yeah. Rich Tech Robotics, don't love this one. It's a, you swing, this is a swing trader stock, like a day trader's kind of stock. They don't really have any, like, they're called Rich Tech Robotics. They don't really have any robotics. Like if we go to or revenue, if we go to the revenue, I mean, it's significantly lower than it was just like 2 years ago, but the revenue is $1 million a quarter. You know, the revenue was 1.1 million. It was down 18% year over year. So no fundamentals really. I mean, I guess analysts are expecting 2 million in 2 quarters, but again, it's just, they have momentum. That's what you hope around for that one. Did you end up buying Innodata? I did. Oh, yeah, I forgot to get to Innodata. Actually, let me check that one out real quick. I do own Innodata, by the way. I actually own them in my Robinhood Roth IRA. They're actually one of my best performance stocks because we are up 132% on Innodata. I wouldn't buy this one here, but I'd put them on the watch list. You know, this one deserves the hype around the name because, their biggest customers are actually Meta and Google. Also, Amazon and NVIDIA are also a customer. They have they're a data labeling company. They have these digital data solutions. Check out the growth here. This is the most impressive part. It's up 99% after it grew 93%. So they're on a streak of growth. And, the revenue was a record this quarter, but check out what it's going to be in 2 quarters. Analysts are expecting 70 mil. They're also net income positive. We go to the net income. They're making good net income every quarter. These are good growth rates. Same with FCF, which is free cash flow positive every quarter, deleveraging the balance sheet. Like everything here fundamentally is headed in the right direction. And that's why I decided to pick up Innodata way back down here. But I wouldn't buy it today, but I put them on the watch list. No net debt. I mean, just good growth. Steven said RYAAY. So this is Ryanair. So Ryanair, or I'm probably saying that wrong, Rainier or something maybe. They're at an all-time high, but it looks like they've underperformed. Let's check out their numbers, though, because that's what matters. Oh, they're a European company, so we're going to convert the currency from euros to USD just to get a better picture of the idea. Oh, so it's an airline. Or wait, designated activity company and other airlines. So looks like most of the revenue says other, and then it says Italy, Spain, UK. So it's like an international, what was this, airport play? A provision of low fare airline related services. So I don't love the airline industry just because it just doesn't really outperform. Yeah, the numbers are pretty choppy here. So I just be careful with that one. You get a 1.5% yield, but yeah, the airlines don't really outperform in the long run. They've definitely done a lot better. Actually, I will say they've done a lot better than almost all the U.S. airlines. It's a budget airline. Yeah, XAB, their stock has performed a lot better than even American Airlines, some of our other names. Delta Airlines is another all right one. Yeah, they just get smoked in a recession. Hey, what up? Said RGTI. This is another kind of momentum play again. I wouldn't. It's just hard to trust real money in this name. It's super fun for momentum for sure. But if we look in the top right, this is a 12. But like, just think about this logically here. This is a $12.6 billion company. You know, I feel like I know what a $12.6 billion company should look like. I've seen a lot of companies worth that market cap, and I think it's tough slapping a $26 billion valuation on this company. I mean, the revenue, the sales are literally 1.8 million, and it's down 42%. I mean, I just could not possibly trust anything meaningful in this name just because of these numbers right here. I mean, no revenue, or the revenues, they used to have a lot more revenue. The revenues collapsed. They're losing 20 mil a quarter. But there's a lot of momentum around the name just because they're in quantum, but I just be careful. What would you say for AT&T at the moment? Yeah, I wouldn't touch this company unless you really just want dividends. I mean, AT&T, just like Verizon, AT&T is the same price that it was in 1997. So again, you're buying this just for the safe dividend. The 4.5% yield is certainly safe, but again, you're not really going to outperform in the long run with that company. Someone said Indigo. What is Indigo? I think Hood will hit 150 in the long run. Yeah, in the long run, I think so too. It might take a couple years, but I think so. All right, probably we'll look at the last. Man said, what app are you using? Yeah, hey, by the way, if you want to get this app I'm on, it's in the link tree in my bio, very first link there. This is a brokerage where you get stocks on. My favorite one, lowest fee. It's an affiliate link too, full disclosure. So if you go and deposit $100, we'll both get like some free stocks. Yeah, if we go to this, actually, another cool feature, we can do the super investor tracker. Speaking of United Healthcare Exodus, what's up, dude? If you go to Buffett's portfolio and its most recent changes and go to newest, one of his newest positions out of the three, he actually bought UNH, United Healthcare, as his newest position. And that's why the stock rallied up so much that day. You know, if Warren Buffett Warren Buffett doesn't just buy any Joe Schmo stock. Like, he really does his due diligence, and that's why the stock gapped up so much that day, because it was disclosed he bought the stock. So looks like the sentiment is really now in UNH's favor. Basically, back here, there was a high probability of them getting kicked out of Medicare and Medicaid for 5 years for, fraud, overbilling the government, giving people those back braces they didn't need. But now it looks like the punishment's going to be less severe, and they're slowly unpricing in that probability. So, and Buffett bought the company. We're a customer. We use OptumRx, that which is super growthy, but yeah, UNH is definitely interesting. You get a 2.3% yield, but I'd still be careful. I wouldn't touch it at this valuation, certainly. Wouldn't buy it at this valuation. Yeah, hey, Tommy, dude, let's get very last stock, actually, because Tommy's a real one. Here's Cheesecake Factory right here. This stock, I also don't. The restaurants are struggling. Like Cheesecake Factory, yeah, they're technically the same price as they were back in 2015. So I'd rather go with a Yum Brands or a McDonald's. If I'm like, what's going to be the best total return restaurant? Is it going to be McDonald's, Yum Brands, or Cheesecake? Cheesecake would probably sadly be my last place pick, but their main business is struggling, but their other brands are growing, like North Italia. If we go to North Italia, yeah, that's up 20% year over year. Other is up 17. What is this one? Other Fox Restaurants, that's up 22. So those are all growing, but their main business, the actual Cheesecake Factory, that's only up 0.9. Like that's the bad part, the low growth. Doesn't beat inflation type growth. Like it's 0.9, 0.7, 1, 3, 3, 1, 2, 4. So just slow growth, but that kind of explains why the stock is the same price that it was 10 years ago. But I like that they're in the other. That's kind of the. I like that these other businesses are really growthy though. But It is bringing up the growth rate to 5%, which is good, and they're making great net income. That's the other good news. They're making a lot of money, a lot more consistent than of a lot of other names. I know Chili's is doing really good as well. Maybe check out Chili's right here. EAT stock. They own Chili's. And Darden, DRN, I think, or is it DRD? DRI. This company right here, Darden brand, same dividend yield. So look, you get actually a higher yield than Cheesecake Factory. You get a 3% dividend yield with this stock, but you own some other good brands like Olive Garden, Longhorn Steakhouse. That's up 8% year over year. So like Texas Roadhouse is another one. So anyway, yeah, that was the stream, guys. I got to go. We'll be back. We'll be live at exactly 7 hours from now. If you want to hit the follow button, hit the alarm or something, we'll be live at exactly 7 hours from now. By the way, before you go, please hit the like button. It still does help me out. If everyone on the YouTube stream would hit the like button. By the way, best way to support me for everyone on the TikTok stream, best way to support me is to subscribe to my YouTube channel. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. You can just type into YouTube Nathan Robert. If you missed anything, you can replay it on the YouTube stream. I know I talk too fast sometimes. I apologize. But hey, thanks, Ben Ren. Sorry if I didn't get to anyone's stocks. I do apologize. There's just so many. But anyway, see y'all later. What was that? Yeah, by the way, again, if you wanted to get this app I'm on right here, this Brokerage, it's where you buy stocks on. It's in the link tree in my bio, the very first link there. See you all soon. See you in 7 hours. Thanks for being here. And thanks to everyone on the YouTube stream. Y'all are real ones. See you, Brian. See you, Tommy. See you, Rob. Oh, sorry I didn't get to Newmont and ITB. No, Ven, I'm so sorry I didn't get to that stock right there. And Newmont. See you guys later. See you, Tommy, Stephen, Bulls. See you, Noah. See you, everyone.